Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun going over charts and options data. And so this is week 9 of the highly regarded options theses. And so, yeah, I'm going to be taking you through the list that's over here, some of it hiding behind ed, but I will go over all of the tickers there and I'll kind of give a little bit of a breakdown of some of the highlights there. Also wanted to go over, some rules of thumb with this as well as, my thesis for trading these contracts. Got the key over here that shows, what I'm doing with these contracts, and also kind of like, as a Christmas gift to you guys to celebrate the new year and all of that. I had been thinking about doing this for a while, posting a link to this spreadsheet. I had tried to do it in Google Docs, but a lot of the formatting just changed, including the graphs and stuff like that. So I decided to just post a link to this, I believe, on Microsoft OneDrive. You should be able to download the spreadsheet and then resave it so you can edit it if you'd like to kind of use it as a template. But yeah, so it's there. Let me know if you have a hard time with that. I'd be happy to post it via Google Docs, but I'm just not going to have the time to reformat everything. But yeah, I did just want to, include that there. And I know you can't see the full link there, or maybe you can in the formula bar up here, but I will include a link to that spreadsheet in the description of this video, so you should be able to access it there. And then before I go over the details over here, I did just want to point out some of the highlights here. And so I had previously been tracking some BlackBerry calls that were with a $3 strike. And so I upped those, one to the $5 strike, another to a $7 strike. And so I did add those here, as you can see, begun tracking with that crayon emoji here. I did swing the $5 call over last week, but I recognized, hey, there might be a topping signal and or consolidation signal. So I took a little bit of profits, and I do plan to re-enter if there is a little bit of a pullback. And if there's kind of a bigger pullback, I would then look to get in the $7 calls that have, a much further expiration being a leap. So something to consider there. But I'm not going to be tracking the $3 calls anymore, just because price went above $3, and I think that there's more opportunities with the stock, just with it going higher. Also, I did add, let's see, this is BBAI. This is one that I'm not going to be tracking via the spreadsheet, but I will go over the data in unusual whales. I just, it's too much to be keeping track of all this stuff here in the spreadsheet, but that is one that I was interested in. And I just can't be getting involved in all of these. And I have to note that I did break this rule this week. I do have more than 20 positions right now, but some of them are duplicates, and I just kind of wanted to follow up with, if I'm bullish, why would I sell if I think it's going to go higher if there are small positions? So yeah, that's part of the reason why I wasn't tracking BBAI. I really just added it to this tab here to go over the unusual whales data. And then kind of some updates on the Luminar stock. I did just put out a video on that, so I'd recommend checking that out. But I kind of viewed these two contracts that expired in May as being a little too short term for a stock like Luminar. And with these two contracts, I was interested in tracking the call, thinking that, there's a gap up there, it could be going higher, but also recognizing that, I had highlighted a level at $6.11. I thought price might be going down to that level. So that's why I wanted to be tracking this put. Price closed the week below $6, but I do think we're getting a bounce, a nice rebound. And so I think price could be going higher from here, but there's just really not that much activity with these contracts with this expiration. So I'm going to be waving goodbye to those. And instead, I will be tracking the $15 call with the January 16th of 2026. That's a leap just like the one up here, because I think that Luminar has a lot of potential to be going to the upside. But I think just a May expiration is, not only a little too risky, but also I just don't think that there's going to be enough volume traded on that to make it worthwhile. So that is why I wanted to be shifting over to be tracking this one call, $15 strike expiring January 16th of 2026. Also, kind of a similar boat with Big Bear AI is looking at OKLO, which you can't see. It's behind Ed's head there, so I'm just going to scroll up so you can see it. And that is the $40 call that expires June 20th. I was interested to be tracking this last week, but again, I just had too many other things going on. I couldn't be doing it. So I don't have it in the spreadsheets, but I will be going over some of the data in Unusual Whales. Maybe that's something to establish a position in the coming weeks if there is a nice pullback that looks healthy, just like with BBAI. But currently not one that I'm looking to establish a position in, but just kind of curious, wanted to follow along with it. Oh, and also I should mention too, I guess just below OKLO is Plug Power. I was considering removing it from the list this week. And, I do have shares. I don't have any contracts with it right now. But, in all honesty, I'd kind of like to trim my share position and then just focus more on swinging calls, just exposing myself to lower risk as far as the dollar amount goes, with a plan to get in and out. And so I kind of like that with Plug. I think $3 is a reasonable strike for June. So I will continue to track that. I did take profits on my contracts, currently not holding any, but I do plan on probably trimming some of my shares just because, I want to be engaged with it. And I just don't think that, shares is necessarily the best way for me because I'm having fun with these options. A couple more that are on here. One is TLRY. I did take profits on this, a week ago, more than a week ago. And it was effectively break even. I should have held it for, just a couple more days because it did bounce. But I do think that it could be pulling back. So I think that there's, it's a good time to exercise caution with that, take some profits. And so that's what I did. I just did it a little bit premature. But, that's the way it goes. I just really wanted to be lowering the risk with that one. And I just don't feel like it's worth it that much with a $2 stock or sub $2 stock. I just don't think that there's enough options data, so I'm not going to be following that one anymore as I am going to be done tracking it. And then a new one that I added, which I'm actually really excited about, is this Unity Software $42 call that expires in June. I had initially been tracking this $30 call that expires in June because that was the highest strike. And going over the chart, if you check out the video I recently put out on Roaring Kitty's recent post to X relating to potentially Unity Software, but, as always, GameStop. But, I think that $42 to $45 is a reasonable target. And so that is one that I am tracking. And I think actually, I need to adjust that symbol to, I need to get it to be the holding symbol there. And any edits that I make on this may not be, tracked in the online version. So do take note of that, but I will try to re-upload it once this is done. So it does include all of the changes. But yeah, that is a contract that I do hold, and I do hold not a lot, but a few shares of Unity Software now. And then I am going to continue to track the VIX, this call, the $35 strike that expires in February. And, I just think that's a good thing to be tracking, but for me personally, not good to be trading. But yeah, I just find that interesting. And then kind of scrolling back up in the chart, some of the contracts that I'm either holding or effectively that I'm holding, but I've been kind of disappointed in them. I may be looking to exit. That is going to be AMC. Unfortunately, I got a bunch of shares. That's enough risk for me. Another one is going to be ChargePoint. Again, got a lot of shares. That's enough risk for me. And then let's see, another one is Hycroft Mining. I just feel like it's a little too speculative, similar to TLRY. So those are some contracts that, I'm still, holding, as you can see over here. But if I am going to try and get my average down, it's going to be fairly passive, and I am just, looking to exit. I do think that those could be losers. And on the note of loser, I am still holding this contract, $35 call, expires in March for Marathon Digital, ticker symbol MARA. I'm a little bit concerned that that could be a loser, so I am going to be looking forward to taking a small amount of profit with that and exiting if that does happen, and kind of more strategically get my average down. So I will go over that. But anyways, enough from the list over here. I wanted to go over the updates from here. And actually, I forgot to add this to X, so we'll have to go over to Grok's top 10 premium picks at the end of this. So I will have to do that. But anyways, starting from the top here, this is a trading journal documentation for me. I like to do this for myself personally. Making these videos helps me out in being accountable with these trades, and also just laying out my thought process, my thesis. And so, hopefully it's helpful for you guys with me sharing this. But, this is all for educational purposes only, just for fun. This is the documentation of my learning process. Hopefully it's helpful for you in your learning process, but absolutely none of this is financial advice, as some, if not most of these trades will be bad, and most, if not all of the contracts will go to zero leading up to expiration. So do consider that. And any of the levels, any of the contracts that I talk about in this, I do make these videos on a weekly basis, but in that time, plans may change as the market changes. News can come out that can completely change the theses that I go over on here, so do consider that. Also, any of the data that I have in these spreadsheets is stuff that I populate manually, some of it by copying and pasting, but some of it by typing. There could most definitely be some typos in it, so take it all with a grain of salt. Also, I am going to be going over unusual whales data in this video, and so you can find their information at unusualwhales.com. Currently, they have a Christmas/New Year's sale going on that I believe ends sometime in January, maybe the 3rd, maybe it's the 8th, I'm not really sure, but I think you can get 15% off, whether that's a monthly subscription or the annual. I personally have the annual, and I just think it's a really great tool, but I also think it's good to get familiar with the platform, the software, the website, the data that they offer, using what they offer for free. And then once you get more familiar with that, then I think it's worth it to spend some money on the paid subscription, whether that's monthly or annual. And that's kind of what I did. I initially paid for it, found myself overwhelmed. Then I just explored the free data, compiling spreadsheets here, checking their website every day to get the data, compile it here to learn more, just kind of more hands-on rather than being overwhelmed by the data that they offer, just kind of filter it into, what I can digest. And so that's really how this weekly options thesis has been born, was by trying to understand unusual whales options data. And so that's what I go over here. And then also, all the tickers, all the contracts that are over here based on the shading, I do have timestamps to them. So if there's a ticker of interest, you can skip to that, but they are going to kind of build on each other. So, the first ones that I go over will be AMC. That's probably going to include some more kind of foundational information that I go over in more detail that will then be applied, for the other contracts. So something to consider. And then again, at the end, I will go over Grok's top 10 premium picks. And then to go over my thesis that, I kind of apply to all of these contracts. Number one, I believe I forgot to mention it last week, is that the plan is to, or my thesis is to not fall in love with these contracts, to not fall in love with the stocks. And that also relates to not having FOMO, not being jealous. And, if other people are making money, I'm happy for them. But, I don't want to be chasing. I don't want to be getting into that. I want to be taking profits. And with that being said, I don't want to be getting greedy. So that's kind of like the rule of thumb for this thesis. And it starts with when I get one contract, I usually accumulate them one at a time. I then plan to take profits at 80%. If that doesn't happen and it dips a little bit lower, then I add another contract, and then I plan to take profits at 20% and 80%. One thing that I did add here is this little stop sign, and that is something that I recognize I should have been doing, and I applied to a couple of the contracts here in the list, which I'm sure I'm going to not necessarily regret, but I think it will be me being overly cautious. But once the contracts go above 20%, whether or not they hit 80%, I need to then manage risk and have a stop loss at whatever would be a 20% gain. And if that forces me out of my position, then so be it. I'm managing risk. I'm not then going to be, holding these contracts negative. And so I think that that's a better way for me to manage risk while still taking profits. But then following, 20 and 80%, if I then pick up a third contract, I would then have a limit sell at 100% profit. And then again, kind of managing risk. If it does continue to dip lower, if I have 4 contracts, I would sell at 10%, 20, 80, and 100% profits. And then if I pick up 5 contracts, I would then trim at break even. And then if I get up to 6 contracts or more, I would then trim at 100% increments following, 100%, really leading up to a 10 bagger. So that would be ideal, but, it's not always going to happen. And of course, to end the week with 20 positions or less, this week I actually have 22. But I realized, I didn't want to be taking profits on some of them because I think they will go higher in their small positions. Maybe I'll regret it. But yeah, I just kind of wanted to follow, this as kind of a guideline rather than a hard rule. And really part of the reason why I went to 22 rather than, 24 or 21 is because some of these contracts I kind of want to get myself out of. And I'm pretty close to getting out of this ChargePoint contract. Not so much with the Hycroft one, but those are 2 that, I feel like might be losers, so I want to shift out of them. And also I should mention Mara as well. So, I'm going to be more passive with adding to those, or at least more strategic with them. But anyways, I've gone on for about 17 minutes for that introduction. Now it's time for me to get in to the data. And so I'm going to begin with the AMC $8 call that expires June 20th of 2025. And so, for these contracts, I'm going to first go over the spreadsheet data, then I'm going to go over the chart, and then I will shift into unusual whales. And I'm probably going to cover all of the contracts per each ticker here before shifting over to the chart and then shifting into unusual whales. And so with this contract, what you can see is, I've got my position down here, and, I could have been taking profits over here. It's been a while since I've added to my contract. As you can see, the last time that I actually trimmed, I took some profit, was over here, and that was at 80% profit, I guess. And I could have set the stop loss at 20% profit, and then now dipping to below my average, I could then be reestablishing a position. So I didn't do that. Good lesson learned there. I'm holding 3 contracts at an average of 53 cents. So it's not a big deal, but I did just, put out the AMC video yesterday, as I tend to do that on Fridays, talking about hope and that being a 4-letter word, meaning that it's like a curse word. And I just think that the stock price could be going lower. And so I'm kind of, going to be pumping the brakes on adding to this contract. And rather than that be, if this dips to, 50 cents or 40 cents, I'm not going to add based on that. I am going to wait for the stock price to come down to the level that I think would be a good level to be more aggressive with contracts. Maybe it's not hit, maybe it is, but that is going to be $3.69, really just having fun with the 69-cent number there. As I have talked about, I think that AMC could be coming down to 350. This is just to, be a little bit above that. And I do have an alert set at 369. So, I'll be notified when that happens. And then I would be like, oh, okay, well, these contracts are now at, 40 cents per contract. Then it's like, rather than just getting one contract, maybe I get 3 or so to kind of double down on it and then look to exit. But yeah, what we can see in the data up here really is just that the stock price in green has come down, bounced, and then come back down, as well as the premium in blue has come down, bounced, come back down. And then you see my position there, that red line, only 3 contracts. I am just feeling a little bit concerned about this one, maybe just with the June 20th expiration. I do think that AMC could be rallying up to $8 a share, or at least, moving violently in the upside direction. But it's also been pretty weak the past couple weeks, really since the dilution, which is maybe not so surprising, but, I just want to be cautious because these are contracts with expiration dates. This can go to zero. It's a little different than shares, which you can hold forever. And, there's always going to be some value there unless it goes to zero, but much less likely than the contracts going to zero. And I do see that as being likely. So yeah, I just want to be a little bit cautious with this one. And looking over at the volume data over here, we do see this spike that looks like it was from November 14th. Volume spiked up to around almost 3,500 contracts. But with that, we actually saw a drop in the open interest, that green line coming down. So that's a little bit of a concern. But if we do look at the general trend of the open interest, that is going up. And then I was going to say, total premium over here, that was a spike of over $60,000. So while that might be a lot of money considering, the amount of capital that we're managing in our individual portfolios, it's definitely a lot for me. That is really just, by definition of Wall Street bets, one YOLO is $10,000, or it has to be more than $10,000. And so this could be, one DGen YOLOing, or maybe 6 of them. And so I don't really see that as being, like following the big unusual whales, like a blue whale, the biggest mammal on Earth. I view this kind of more as, following like a herd of manatees, not until we get into like the hundreds of thousands of dollars. So I don't really see that spike as being that significant. So I mean, I do have some concerns with these contracts, in all honesty, but that's, I'm just going to pump the brakes and I'm going to wait until the underlying stock price is at 369. And if that doesn't happen, then, I will be trimming at 100, 200, and 300% profit. And that would then be, at $1.07, 160, and 214 based on my average of 53 cents. But I am just, for me personally, I have limit sells at those levels. But if it starts to go up to, 80% again, and maybe this one gets filled, I'd then place a stop loss for my remaining. Well, maybe I do it for one contract at 20% and see if 200% gets filled. And then at that point, maybe I just exit. But yeah, I mean, that is all just about managing risk, considering that, we're getting into the new year pretty soon, and the clock is going to start ticking. And then the other contract that I have for AMC is the $20 call that expires January 16th of 2026. So that is a leap. And so with that, I had initially gotten one contract at 35 cents. I did not add. And then on this big move up, I kind of FOMO'd a little, adding to it, just thinking, well, I think that it could be going higher and I like to own more than one contract. Now I own 3. My average, though, is unfortunately above 35 cents. Last week, I did add one more contract at 35 cents, getting my average down to 43 cents, which was previously at 48. As I did, after selling at, it looks like 63 cents per contract from 35. So that was getting the 80% gain there. I decided, hey, well, I've already made some money on it. I'll enter back in at 55 cents if it's going to continue to run. That was on, you could probably guess the date. That was on December 5th. And then, so, I decided to get back in the following day on the 6th when we had the unfortunate news, or, good news for, the company being responsible and securing some money. We had the dilution, and so I bought back in then, and then the following week I got in, added a little bit more at 40 cents, getting my average down to 48 cents. But, following that, we just saw a decline in the stock price in green here, as well as with the premium. And so I tried to get my position average down, as you can see in the red there. But yeah, I just feel like that was kind of a killer of the momentum. And yeah, so I'm just trying to be a little bit cautious with this one. It did hit a low lower than my most recent buy. But yeah, maybe I would add at 30 or 25 cents, but I would not do that until, we hit this level of $3.69 in the stock price. And then maybe we really start to rally after that. And so, yeah, just kind of pumping the brakes on this one as well as the other AMC contract. But just looking at the volume data here, what we can see is this big spike earlier in the year, which was in September, it looks like. And that corresponded with a spike in premium of over $800,000. So, that's a good amount of money to be paying attention to. And following that, we see the open interest. It kind of stayed flat, but you also have to consider the axis here. It goes from 105,000 contracts up to 107,500 contracts. Hopefully I said those numbers correctly, but you can see them here. And yeah, so it's been kind of flat following that spike. So I don't necessarily think that's, good or bad. I just think it's kind of neutral. It hasn't been moving too much, but we did see this recent move higher and it has held. So I do think that is good, even though it's not backed by much premium over here. So yeah, that's pretty much it for this spreadsheet data that I wanted to go over with AMC. So now let's flip over to the chart here. I did just do a video on AMC, so I'm not really going to go over it much over here. Basically, I think that price could be breaking down to around 350. Before really taking off. So I think it could be heading towards this gap here at 291 before going to fill this gap up here at 685. I don't think that 291 will be filled. And so that's kind of why I have this alert here at 369. No, at least no substantial buy orders placed at 369 here. I do have a small buy order for some shares if it dips basically back to, below $4 a share. But that's, a very small kind of passive DCAing that I'm doing. I wouldn't think to get more aggressive, whether that's with contracts or shares, until it gets down to 369. I've got enough shares to hold for any big moves to the upside, so not too concerned about that. And then if we do go over to unusual whales, so we've got the $8 call strike that expires in June. And so I just kind of wanted to go over this data here. This is looking over the past 30 days. And then over here, looking at the net premium, which is just from the past day. So I'm just going to scroll this up so we can see both of those charts a little bit better. And so looking at the 30-day chart over here, what we can see is as the premium in yellow has been coming down, even with this little bit of a spike, premium's been coming down. The volume has kind of died down a little bit. We did see a little bit of a spike, though, on Friday. So maybe that suggests, like looking at this premium here, maybe there's a little bit of a double bottom there. Hopefully, that's what I would like to think. But if we do look at the net premium, so this is for all contracts, all AMC contracts, we can see that in yellow, that is going to be the AMC underlying stock price. That has, kind of been up and down a little bit over the course of the day. But what we see as far as contract premium is that the net call premium in green there has dipped lower than the zero line, has gone negative. So that suggests selling of calls, whereas the net put premium has gone up. So that's in red over here. And that suggests a net buying of puts, so that is more bearish. And with that, we can see the volume of premium, like regarding these contracts, I should say. I'm still kind of learning how to analyze these charts, but what we can see is overwhelmingly the volume has been more bearish, that being to the downside, whether that's selling of calls or buying of puts. The volume looks negative. It doesn't look so good. It's red there. So that makes me think we could be seeing a little bit of a breakdown with AMC. And then looking over at the other contract here, this is the $20 call that expires in January of 26. We can see that there has been more volume traded on this as it has come lower. So maybe that's a good sign. And if we scroll down, we can see that we have seen overall over the past week, it looks like actually a net decrease in the number of contracts. So this has been more selling. So something to consider with that. And then another, kind of reevaluating how I want to be going over this in the videos. I'm just going to search for AMC here so we can see all of the contracts that were traded on Friday, sorted by highest volume. Tracing or following the volume, that might be like following the sheep, following the herd. I don't want to be doing that. I want to be following the smart money, or the wolves, the sheep herders. And so that is going to be the bigger money. So I want to be sorting by premium. And so the most amount of premium for AMC traded on Friday was this contract, which is a $4.50 put that expired on Friday. So it's not too surprising that there was a lot of premium traded on that. We closed that those contracts closed in the money. So that might have been people taking profits. I'm not really sure. But yeah, that was the one that was traded most on Friday. But we also do have the ones under that did not expire on Friday were calls, so maybe that's a good sign. We can't really see, what the change in open interest was between, Friday and Monday. We'll get that data before open on Monday. What we can do is sort by the change in open interest. And so between Thursday and Friday, we can see that there have been a number of calls that had increases in the amount of open interest by thousands of contracts. And so that is, more on the bullish side. So I think that that's kind of a good thing to be looking for. But yeah, now I am going to switch over to the next ticker, which is going to be BlackBerry. And so here I'm looking at the $5 call that expires June 20th. And this is one that I did establish a position on Christmas Eve, so December 24th. I got one contract at a price of 47 cents. The low on that day was 45. So, feel pretty good that I bought the dip there. And then I decided to take, it was just, usually I set limit orders based on the percentage amount, but I did this one just being like, well, it could be topping, so I should just take profits, but still plan to buy the dip if it goes to 40 cents, which would then be getting my average down or my position down, which is, I don't have one. But yeah, I took more than 10% on that just over the course of one day. So that's pretty nice. I ended up making $5.88. So that's not a huge amount of money, but practice makes perfect. And I am learning. And we did hit a low on Friday of 40 cents, but unfortunately I did have this order placed. It was not filled, still have it placed. So if we do see a little bit of a pullback, which it does look like we could be seeing, with the stock price in green here going up, maybe this is a bull flag and it breaks higher, but maybe we continue to see a little bit of a pullback, and then, I would add to my position there. And, with the stock price pulling back a tiny bit that you can see there, you can see that the premium has actually pulled back more. And if I would have diamond handed that contract, if I would have held it, I would be negative right now based on the average price of that premium for that contract, which you can see here is 42 cents. So, I feel pretty good about that, and I do feel like this order will get filled. I will be able to re-enter into this position. But then looking at the volume over here, we see these pretty big spikes. Those correspond with 4,000 and over 7,000 contracts. And the premium on those, this one back here was a premium of about 50,000 or so, a little bit over that. So not too huge. But then this following spike represented about 300 $650,000 in premium. So that is, more than $250,000 that's getting into bigger money. So I find that to be pretty interesting, but, I just felt like, it was getting a little bit overheated. So I was glad to take some profits. Hopefully I can reestablish the position. Also because, I just feel like making money with BlackBerry is kind of funny because we all think about those, phones with the little keypads on them and stuff. And BlackBerry is actually more into, and really, has always been, as far as I understand, more into software, cybersecurity, stuff like that. They just previously had pivoted into cell phones, but then pivoted out. But yeah, I just think it's like a throwback to like 1999. And so I just think it's fun. I think the stock's beaten down and I think it's breaking out, so I'm excited about it. And then the other contract that I'm looking at is a LEAP. This is the $7 strike for January 16th of 2026. This is one I don't have a position in, and I don't necessarily plan to buy it, but it would get my attention if it hits a low of 48 cents. I'm not sure if I have that just because it's lower than the low from Friday, which was 49 cents, or if that's just the number that I had picked out. I believe it's the number I had picked out from the previous contracts. What I was risking was maybe $48 or something. And so, yeah, if it dips down to 48 cents for this contract, then, maybe I would consider getting one of these leaps. But, I am, more interested in kind of swinging these contracts shorter term. So getting leaps is not necessarily as appealing to me, but they're a little bit safer, as I am learning. And also, I think, too, there's going to be probably more volume traded around leaps than there are going to be, on the monthly contracts. But the June 20th, that is quarterly, the halfway point of 2025. So maybe a little bit more volume traded in those contracts. But yeah, I just don't want to be holding the ones they're not going to be buyers when I want to sell. And so, yeah, but just looking at the data over here, the volume here, we can see this nice big spike. This looks like it was, where's that big spike in volume? Looking at the data here, that spike in volume went up to like 1,800. And so that would have been from the 23rd. And that corresponded with premium of about $93,000, the blue line over here. And so that's, still, it's not hundreds of thousands of dollars, so maybe a little bit of concern with that. But with the spike in volume, that spike in premium, we have seen the open interest continuing to go up. So I do think that is a good sign. So, I feel good about both of these contracts. I just rather not be buying at the top and continuing to add to it. I'd rather, be adding, as there are pullbacks and continuation higher. But yeah, on the note of thinking about these contracts, thinking about, pullbacks, let's look over at the chart, the BlackBerry chart here. And yeah, this is kind of what I was thinking about, that, we had this big, beautiful green candle up, going up almost 24% on the 20th. And so that kind of got me thinking that, since I had, established this position, following the 20th, and it seemed like, when did I sell? Sorry for switching back. It was the 26th. So on the 26th, yeah, it's like maybe that's a gravestone doji, a little bit of a topping tail with that big wick up there, hitting a high of 406. And also, the prior contracts that I was trading, they were in the money above $3 a share. And so that's kind of why I wanted to reevaluate with a $5 and $7 strike. But, just because these are still out of the money doesn't mean that they're necessarily a good discount buy. So I could see this pulling back a little bit more, maybe to some of these levels, like, $3.40. What is that based on? I think that's a Fibonacci extension there. And so maybe that would be acting as support, but really I think from an extension, I'd expect that more to be serving as resistance. So maybe I want to click this and add, let's see, the 1618. And yeah, so maybe that is a level that will be acting as resistance around 425. But yeah, thinking about levels that might be, acting as resistance as it's moved up. I've got this Fibonacci retracement, so not extension. We did go up to basically, double top here around 385, currently trading right around there. So maybe I could see this pulling back to maybe 360 to that 236. or maybe, like I said, 340, 325 or so with that 382, possibly around $3 a share, the 50% retracement, but I see that as less likely. What I see as more likely is consolidation up here, bullish consolidation before a move higher. And just taking a bigger step back, let's see, this is just the daily. I guess I didn't really do too much analysis looking back, with trend lines over here. But yeah, just looking at this on the weekly, it does seem like, let's see, maybe, it's a good time for me to add some lines over here. So just based on the high from November 5th of 2021, and then just kind of like the pivot highs over there, maybe that's actually not the best line to draw because, clearly we have broken out from that. And so that's not super useful. So maybe I want to limit this to this time frame, a more recent time frame. Maybe I do want to do that on the weekly, actually. And yeah, so just going back to, let's see, this was September, beginning of September, hit a high of 575. So let's draw a downtrend from that. And we can see, and this might actually be pretty similar to what either, the Bronx Viking or maybe, let's see, Mr. Chart Norris drew on this. And so, yeah, I mean, we did break out from that. Looks very clear. And so I think we could be seeing a retest. So good to be cautious. And I'm just going to switch over to the daily to make sure those pivot points match up and make sense. So that one does. This one is a little bit off. So I am going to adjust that to be, let's see, the high right here. That should be at 385. So let's just make sure those numbers are correct. Yep. And so, yeah, that's locked into place. So it's there for us to reference. And yeah, I just think this is like a really beautiful, test, rejection, or you could think about this as, a pullback breakout, bull flag, bullish consolidation, repeating. And so, yeah, I mean, I think that this could be going higher. And so why do I think, $5, $6? I wasn't even thinking about it when I drew. Actually, no, I didn't just draw this. The one that I added was this one, the 1618 from that extension there at 425 or so. But let's see, this 1618 is from this retracement here. That's right around $5 a share, so that makes sense. Also, there's a lot of consolidation over here around 5, so maybe that would be a level of resistance. Over here, 575. Why would I pick 7? That is going to be because of the high over here. And so I'm just going to draw a horizontal line to note that, and that is at $7.20. So that would be like more of a longer term price target for this. Maybe though January of 2026 is too soon, so I would not plan to diamond hand, hold long term, any of those contracts. I would have an exit strategy, really just kind of like using my thesis table as a guide. But if I think that this is going to be rallying higher, I probably wouldn't be trimming so much at 20%, maybe at those higher levels like 80, 100, and so on. But yeah, so that is just the BlackBerry chart there. And let's see, I am going to now switch over to the data here. We can see the two contracts, and this might be, maybe a little bit concerning, looking at the 30 days over here for that $5 call strike that expires in June, and this being the 1 day for the net premium. And the reason is because look at all that red volume there. So that has me a little bit concerned. We do have the price coming down a little bit. Like I said, I think it could be putting in a little bit of a topping signal, or maybe it's just the start of a bull flag. But with that consolidation, I think the premium is going to go down. So I think that's some dip buying opportunities. And here just looking at this, the call premium looks like it's kind of like gone off the chart here, whereas the put premium looks like it's gone off the chart here. So more bearish, as you can see with that red volume down here. But then we have the call premium, that being negative, suggesting the selling of calls. And this is for all contracts, so not the one that I'm specifically holding, but the one that, or not holding, I'm interested in. I'm not holding it anymore. But generally, we can see that The open interest has been going up in these, so that does seem like it is a good thing. The $7 call, that is a leap expiring in January of 2026. Same data over here that I just went over. We do see, some spikes in the volume as it's going up, and then kind of a cool off. And so there might be some dip buying pullback opportunities if this is to continue higher. And what we can see here is, net buying of these contracts as the open interest has been increasing. And so just like I did with AMC, I'm just going to search BlackBerry over here to see, here the highest volume contracts. Don't want to be following the herd of sheep. Lots of volume, lots of sheep. Want to be looking at the premium because that's going to be the wolves or the sheep herders, the smart money. And so premium traded on Friday. Lots of contracts in the $100,000 ranges, so that's good. All of them being calls, but we don't know if they're being bought or being sold. We'll find that out at the start of, or right before the market opens on Monday. Unfortunately, I'm working Monday, so I won't be able to really be checking that too closely. But if we look at the open interest, the changes in those contracts from the previous days, the top two look like, so this would be between Thursday and Friday. The open interest looks like it increased pretty substantially with this one that expires January 3rd. So that's this coming Friday. It makes sense that that would have a lot of volume. That is a strike of $3.50. That is in the money, but it might be closing out of the money. So we might be seeing a pullback to around $3.50. That would kind of make sense to me, considering, the amount of volume on this. And hundreds of thousands of dollars traded on it. But we could also search by changes in the open interest. And so we can see that the increases, lots of increases in open interest. The top two are calls, so that's good. One of them being months out, expiring in March. So I think that there's a little bit more to that, although what we can see, not too much premium traded on Friday, but that's also Friday, and we can see here massive amount of premium contracts increased between Thursday and Friday, 3,000 contracts. So that increased by about about a half. So that represents about a third of the current open interest. But prior to these contracts being bought, open interest was around 6,000, less than 6,000 actually. So that is, a good boost. People thinking that price is going to be going higher, $4 by March. And so, that is out of the money currently, but not by much. And then, we did see this other call, $3.50 strike. And that also increased by a notable amount, almost 2,000 contracts, and also had, almost $200,000 premium traded on it on Friday. But we don't know if that was an increase in those contracts. Those are expiring on January 3rd, so that's coming up this Friday. So, that's not surprising that would have a lot of changes in open interest, people taking profits or, whatever. That one seems to be pretty risky to me. And then the other ones down here, those are puts. Also, this one, expired Friday, so on the 27th. So, of course, there's going to be a more volume on that. Puts, those did close in the money at $4 because it closed at $3.91. And then this other one, $4 put, that is the upcoming Friday expiration, January 3rd. And so, I could see that the stock price coming down a little bit more, especially, with this one here, having a lot of volume on it, $3.50. It's possible that's max pain, although I haven't searched it. I don't know exactly. But that is something to be paying attention to with those. So for me, I'm not looking at other contracts, just these two that I went over. But I'm looking to add or, establish, I should say, on pullbacks. But the next one that I'll be going over is this is going to be BBAI. And so this is not one that I'm going to be going over in the charts just because it's too much data for me to handle. But what we can see, looking at the data here over the past 30 days, is we saw this massive spike in volume that was almost 2,500 contracts. And that was on, December 9th. And on that day, the volume, like I said, 2,500 contracts traded. And this candle premium, and that's representing the entire day, candle premium of $350,000, so more than $250,000, so pretty big there. But that was also a high in the premium that you can see in that yellow line there, quite a big pullback. And so this would have actually been the time to buy on December 12th. The average premium on that day, or the average fill, was 47 cents. And now it's currently trading, it looks like the average fill was 157 cents, or $1.57. So that is more than a 3x, or a 200% gain there. So pretty nice, but I think that there could be a pullback, just like we saw a pullback here. So I basically, just for these videos, I'm interested to watch this, but for me, I'm not looking to establish a position. Just because I've got too many others going on. I'm already over, my limit of 30 positions. And so looking at BBAI here, it looks like it closed at $4.20, our favorite number. And from the data here, the net premium, and also, looking at the stock price in yellow there, it does look like it pulled back some. And with that, we saw this spike in call premium, but it didn't last long, as it did end the day negative. Whereas, actually net puts have been, it looks like negative there, put premium, but we see that the majority of that volume was on puts. So maybe this is actually kind of bullish, but I'm still learning how to interpret these, but it generally just seems kind of neutral. And what I should do, and maybe I should have done that before going over the data here, is going over, actually, I'm going to keep going over the data here just so we can see. Actually, no, I'm not going to do that because that's just getting into the nitty gritty. We went over that here in the data here. I am going to switch over to the stock chart of Big Bear AI, ticker symbol AI, which it looks like it actually closed at $4.21, but in the after hours, it ended there at $4.20. And so this, really just based on my doodles, I think that this could be coming back to around maybe $3 a share, but maybe also we missed the dip there, as there was this pullback. That was the dip buying opportunity. Did go higher. But with this top that we're seeing, maybe we're seeing some bearish divergence, or some big bearish divergence, but maybe not. And so with this, we see higher highs in the stock price. What do we see in the RSI? We actually do see lower highs. That is bearish divergence. That doesn't necessarily mean there's going to be a massive pullback or anything, but maybe there's a cool off. Maybe there are better opportunities to add into this AI play. But yeah, really, I'm just speculating with this one. You'll have to let me know if you want me to follow up on Big Bear AI. Happy to do it, but not going to spend too much energy on it, just because there's only so much I can do. And yeah, before I start the next one, I'm actually going to take a drink of water, because I'm, to be honest, getting a little bit lightheaded. I should have eaten lunch before doing this, but oh well, I'll keep going. And yeah, so the next one on the list over here is going to be Celsius, ticker symbol CELH. This is the $50 call expiring June 20th of 2025, so about 6 months away. And so this is one I do have a position in. Looks like I'm holding 4 contracts, planning to trim at 10, 20, 80, and 100% profits. The next addition that I would make would be for a trim at break even. So it's not the most exciting addition, but from going over the data, I apparently did feel compelled enough to add or place a limit buy at $1, as we did hit that level on Friday. I just recently placed the order, over the weekend. So it's not that it didn't get filled, it's that I didn't have the order placed. And yeah, and you can see kind of the way that I have been adding to this. The next level might have been like $1.10, but I decided to wait, being a little bit cautious. I'll go over the reason for that in the chart, but looking over some of the unusual whales options data for actually a different contract, makes me feel pretty bullish on Celsius, because I believe there was an $18 million buy in one of the contracts, and that has been held as far as I can tell. So I feel like that's, big money. That's an unusual whale. And so that gives me a little bit more confidence in buying the dips here. But these contracts are, more than $100 per contract, given that this represents 100 shares. So that multiply $1 by 100, and that's going to be $100. And so looking at this in the chart here, the green is the stock price based on the close. We can see this pullback. Maybe we're forming a bear flag, so that's what I'm a little bit concerned about. We also see these dips in the premium in blue, so kind of nice there. But what we see in the data over here is these pretty big spikes in volume, which correspond with, not a ton of money, 60,000 over here, and then like 50,000, 50,000. So that's not into the $100,000 territory. So it's not that massive, but behind the increases in volume and that premium, we see the open interest going up. So that is good. So that does give me some confidence. If we do look over at the chart now, let's see, we can see that, maybe this is a bear flag. This kind of looks to me like, this is somewhat of a falling three methods, except we have 5 candles in the middle rather than 3. But this big red candle consolidation inside bars, and then a big red candle on Friday, going down 4.41% on the day. So that has me a little bit concerned. But I do feel like generally we have been respecting the 786 here at 26.76. I do have an alert at that level just because, it's like, okay, maybe we're respecting that as support, but so far closing the week below that level, it doesn't really look like it. However, on the days that we have, wicked below that 786 level, we haven't gotten any closes below the lows. So while this close below that level, especially a weekly close below 26.76, that doesn't look so good, but we haven't closed below the low that we hit on the 23rd, which was 26.36, and we haven't closed below the low that we hit on the 18th, which was 26.37. And so while we have been putting in, lower lows here, hitting a low of 26.27 on Friday, we haven't closed lower than those levels. And so closing lower than these levels, in my view, would be a confirmation that this is a bear flag, that this is breaking down. And so just one close below that level, I view that as possibly being a fake out, and this could be rallying higher. But of course, I could be wrong. It could be coming down to like $26 where the yellow line is, or maybe $25 where the orange line is. So good to be planning for that, or have a plan for that if it does dip lower. But the reason why I'm a little bit more confident in this one is because of looking at the unusual whales data. Let's see, I forgot to go over, just do the search with Big Bear AI. Sorry about that. I'm not going to do it now. Oops. So I'm just going to look over the Celsius contracts here, and we can see, these kind of big spikes in volumes. And this one, really, buying the dip, or maybe that was selling. Let's see, that was on the 20th. And we can see for this contract, the 20th, we had that spike in volume, 373 contracts, and that was a net increase of 223 contracts. So that was net buying as it dipped. So that is good. Smart money wants to be buying cheap, selling high. So that gives me some confidence. And looking at the net call and put premium over here, as we do see the stock price coming down in yellow, we see the net put premium coming down, also, being negative. And we also see the net call premium also coming down, being negative. And this is just for the one day. This does look like it was net bearish initially, but then it kind of shifted over to being more net bullish with the green there. But, I might be interpreting that incorrectly, so take that with a grain of salt. And the other contract that I've been looking at, but really just kind of tracking in unusual whales, has been this one, which is the $40 call that expires in July. And the reason why I'm tracking this one is because it gives me a lot of confidence in the contract that I'm holding. And that is based on this big spike that we see here. Candle premium, as you can see, over $18 million. And while the majority of that was on the bid side, would which would make me think this was majority selling. Also at the top, if we look at the data down below, we can actually see that that contract, so that was on the 13th, let's see, this was on the 12th, sorry about that, this was on the 12th. And if we scroll down here on the 12th, we do see that spike in volume of 38,000 contracts, when on the 12th, the open interest was 172, but then it spiked up by about 38,000 contracts. And so, yeah, the volume on that day was super bullish in my view, that Celsius is going to be going a lot higher. And this pullback that we've seen has just been a dip buying opportunity. Those contracts, or that contract, I should say, it's one contract, has been held. 38,000 contracts, still seeing it, and it's actually gone up, even though, there was a little bit of a change between Thursday and Friday by -3 contracts. But, overall, 38,000 contracts representing premium of $18 million. So that gives me a lot of confidence with Celsius. And then if I do look over here, looking at the general contracts of Celsius, not sorting by highest volume because that's following the herd of sheep. We want to be following the money. And so premium, we can see hundreds of thousands of dollars traded on Friday. Looks like a lot of them being calls, whether they were bought or being sold. We won't be able to find out until just before Monday morning opens, but we can sort them by changes in open interest, which would be between Thursday and Friday. And we can see that a lot of increases were majority calls. We do have a couple puts over there, and those are expiring this coming Friday. So $25 strike and the $26 strike. Both of those being out of the money, they were bought, so maybe we will see further pullback with Celsius, but maybe not. But also good to consider, since I did sort by the change in open interest on Friday, the amount of premium traded was not in the hundreds of thousands of dollars for these contracts. But, if we wanted to, we could. I'm not going to do it. It's just going to take too much time. Could break down the math for the change in open interest based on the volume, and so that would be suggesting whether or not these are more bearish or bullish. But yeah, I just feel pretty confident based on this one, that $40 call that expires in July. That gives me more confidence with my June expiration of $50, which I would not hold to expiration. That is just a swing. But yeah, let's move over to the spreadsheet here to look at the charge point, $2.50 call that expires May 16th of 2025. And this is one that I am holding a number of contracts with. Let's see, it looks like 1, 2, 3, 4, 5, 6 contracts. And, I just don't feel as confident with this, similar to TLRY. So maybe I would be selling myself short, taking a small profit with this one. But I just don't feel like that there's enough money behind it to really give me confidence. And I do have shares. So, I feel like I'm exposed to enough risk with that. I do have a buy order placed at 7 cents. Unfortunately, I had that placed on Monday. It wasn't filled though. But yeah, my last buy was 8 cents. I get another contract at 7 cents. And I nearly had this limit buy filled. I did have it placed on before the 26th. I probably placed it around Christmas, just thinking about it over the holiday. But my limit sell was not filled. There just wasn't enough volume traded on the day, apparently, for that to be filled at the day's high. And so, yeah, that just kind of makes me feel a little bit concerned about this one, that, I should just take the profits, but then shift to the small amount of profits. It'd be like at most $6, to other contracts that have a little bit more volume, a little bit more behind them. And so what we can see in the chart over here, stock price in green has kind of had this like double top, pullback and consolidation. Same with the premium in blue. And so my average has just been, slowly coming down with the premium that we see. And then looking over here at the volume, we see these nice spikes in volume, but they represent a maximum of $9,000. So not even to be classified as a YOLO based on Wall Street bets. So really not that exciting, not enough money behind this. And if I want to be following the whales, this is not the one. There aren't whales in it. But what we can see with these spikes in volume is the open interest has been increasing, so that is good to see. But yeah, let's now flip over to the chart so I can just go over that. And so here, the charge point stock, I was hoping that this would continue and that we could see this pattern going higher, but instead we've just been consolidating really like along this downtrend. So that has me a little bit concerned. Ooh, I don't know if you guys heard that. But yeah, I mean, this does seem like it's a little bit of a bearish pullback, bearish consolidation. But what we can do is maybe do a Fibonacci retracement going from the low of 105 up to the high of 150 to see maybe the 786 is around here. And so I am just going to adjust the proportions, remove the ones that we don't need, and just, include the 786. And yeah, so maybe that's a little bit of hopium, I would say. Maybe we are respecting 114, 115 as support, as that is the 786. And, maybe that is a retest effectively of this breakout. And then we would start to see a move higher because, as we did break out from this downtrend, we need to pull back to retest it. It would be concerning if we actually break back into it. And we did see that over here around the 16th. So there is some concern there. And so that's kind of why, I'm at least with ChargePoint, just like, I'll just hold my shares. I don't need to be trading options. I'd rather be looking at the contracts that have a little bit more data. But with the, I should mention the $2.50 strike. Why would I pick that? I do have this gap up here at 169. 250, that will be coming up to right around this trend line that I had previously drawn that we definitely broke below. Maybe from that, it definitely looks ugly, but maybe we start to form an inverse head and shoulders. And so that would be, why I picked that strike, but maybe we don't get there until after May. So yeah, I just think that it's kind of a risky contract. Shares, I'm fine with that, but the contracts, not for stocks trading, around $1 like this, just because there's not as much data with them. There's not enough volume behind them. But if I look over at that contract, $2.50 May strike over the past 30 days, we can see over here that, the price has just kind of been consolidating, not really being too exciting, but going up and then pulling back. We have seen some spikes in volume, but just not a lot of money behind them. But what I would say is probably a little bit more encouraging, and looking at the data from Friday, is that as the stock price has come down, we have seen, the call premium being positive, whereas the net put premium has gone negative. And so that suggests to me that this is more bullish as the price comes down. So maybe there's a reversal around the corner, and we do see this, more green volume here with, being more on the call side. So I think that is a little bit encouraging, but for me, like I said, I just like to take the risk off the table as far as ChargePoint contracts goes, just because there's not enough data on them. And if I do look up the highest volume contracts, again, don't want to be following the herd of sheep, want to be looking at the bigger money. But if we look at the most premium traded on Friday, the largest contract was $100,000. I imagine, actually, I was thinking that would have been, let's see, a call or put that expired on Friday the 27th, but that was not the case. This is actually a leap going 2 years out, expiring January 15th of 2027. This is actually a put. And so I'm wondering if that premium is going, buying, basically going short the stock, or if they're selling. And I would imagine that they are buying because it's an in-the-money put 2 years out. But maybe they feel like it could be going higher. The next one down is $92,000, and that was a call, $1.50, that expires monthly contracts ending in January. And so it's a call, $1.50, that's out of the money. And so maybe that's buying, maybe that's selling, I'm not really sure. And to look at what was being bought and being sold, we actually see The open interest between Thursday and Friday for that contract was a net increase. So that is more people loading into this, but the amount of premium behind it, it's not whales, at best it's dolphins, or manatees. And so if we sort this by changes in open interest, this would be between Thursday and Friday. I think this is encouraging because the increases, for the top 5 have been calls, so that is good. And, that includes the one that, I was just talking about, that 92,000 premium traded on the $1.50 call strike that expires in January on the 17th. So that premium traded was on Friday. And so maybe it's possible that was selling, so who knows. But based on the data that we saw, over here, I feel like it's probably more buying. I think it's more bullish. So I will probably be taking profits on this one lower than I could be taking them. But, I just don't want to spread myself too thin with too many contracts. And this one just seems a little too speculative, especially because I am holding shares. But anyways, let's move over to the next one, which is going to be the GameStop $80 call that expires June 20th. This is one I do hold 2 contracts in, and I decided with it that, while I, previously had one placed at, 100% limit sell order, my average is 325, so that would be, I guess, at 650. I should probably manage some risk and take profits with a stop loss at a 20% gain, which would be at 390. That is a little risky because the low on Friday was $4, but that would be a little bit of a risk that would then secure some nice profits for myself, 20% on $325, going up to 90. So that's is that $65? So that would be a nice little profit for me. So I think it's good for me to manage that risk, and then I would hold the remaining contract for ideally a 200% swing, turning $325 into $975. And the reason why I picked that number is really just kind of arbitrary. I should be following my thesis with this one, but I just think that there could be some really nice big moves with GameStop in January-February timeframe. And looking at the data for this contract, it has been around $1,000 or $10, I should say, per contract. And so I think it could be getting up to $975. But if it doesn't, if I get stopped out of this contract, taking a little bit of that risk off the table, then maybe I would adjust this to 100% swing, so selling at 650. But yeah, I am bullish on GameStop, but I also have shares, so I don't need to be risking contracts. So that is why I would be practicing some risk management here. But anyways, like I had mentioned, the low on Friday was $4. Maybe we see it dip to $4.90 and I get stopped out, and that will suck. But it's risk management, and then I'd have, $390 on the side to play around with. So that's just, and I have to say, another reason for that is I have been practicing the bad habit of adding money to my account the past couple weeks. And ideally what I should be doing is not adding money, but just taking profits on things so I don't have to add money. And so this is one, where if there is a pullback to 20%, which would be up for me still, at 390, that's fine. Take some profits there. And then, I could add more at $3 if it pulls back to that level, but I don't really see that happening. We do see, this is the data for this one's kind of spotty, so maybe I just won't go over it here because there were some days where not much volume was traded or no volume was traded, as you see over here. But looking at that, this just pulls back to zero in the chart here. We can see these kind of like odd spikes that were, over 100,000. This one, a little over 100,000 here. But generally, we've seen this increase in the open interest, so that's good. But we did see this big spike, and then it looks like that was, maybe somebody getting ahead of themselves in a little bit of a pullback. But generally, the trend is to the upside, so that is good. And then if we flip over to the chart, we can see the GameStop chart here did go over it recently, and I do realize I have too many lines on this. I do feel like we could be seeing a little bit of a pullback, although seeing a weekly close above 312, that was the high over here from November 26th, wick high, and struggled to get above that. I think it's good that we closed the week above that, but I had talked about this in a previous stock. I forget which one, because there's so many on this list, but we do have this higher high here in the stock price, whereas in the RSI we see a lower high, that is bearish divergence. So maybe we see a little bit of a pullback, maybe coming down to $27 a share. I'm not sure. And I have, like I said, I have some shares in this, and I had actually gotten a pretty small position. I am increasing my average, trying to buy pullbacks, and I had bought one share at 32 and 31 on Friday, and I have replaced the $31 buy if we do see a pullback, but maybe I want to adjust that to 30 because I do think that this could be pulling back more, and I don't need to be super aggressive if I am increasing my average. So maybe that's a good thing for me to note, or maybe, I want to adjust it to around 29. Maybe actually 30. I don't know that 29 would be reached. We do have this bit of consolidation here. Maybe that would be acting as some support, and that is in the 29 to $30 range. So something to consider there. And, also, why did I pick $80? I think we all know about that because, I think the pre-market high was around $80, I believe, $80.01 on this day, I believe May 14th. But I think that the stock price could be going over $100 a share. So, I think that $80 is a fairly conservative price target, although the time frame, might be a little bit risky. And then so looking over at the data here, what we can see for this $80 call that expires in June. I've seen these spikes in volume. We've seen the premium kind of dancing around a little bit. I am, green with my position, considering that the low on Friday was $4, which would translate to $400 based on the cost of the contract. $4 times 100 shares equals $400. But just looking at the data over here for the net premium, this actually doesn't look so good. We see the net put premium going up here, whereas the net call premium's going down. And, the stock price has really just been kind of flat, but did go up towards the end of the day. But generally, we see it does look overall the volume being more bearish on that Friday. So maybe there's a little bit of a concern that there could be some pullback. And so, I think it's good to, kind of have a plan for that, even though we did close the week above 32, 12. This is the after hours price here, I believe. So if I switch back to the chart, closed at 32.20, so that is above 32.12, so that's good. Still, we might see a little bit of a pullback considering that bearish divergence. And then looking at the general GameStop data here, not by highest volume, because we don't want to be following the herd of sheep, herd meaning volume. We want to look at the premium. Where's all the money? Millions of dollars traded on this on Friday. We don't know how the open interest has changed from Friday trading, which we would find out start of market open or just before market open on Monday. What we can see for these highest volume contracts, majority of them are calls. One is, not volume, the most premium traded on the day. One of them is a put. That's a leap. $125 puts. That's actually kind of an odd one because, so I don't know that. I think maybe deals with hedging, stuff like that. I'm not really sure. And that could be institutions hedging. Like I said, not really sure. But the rest of $1 million premium traded on them are calls, so maybe that's good. But if we look at changes in the open interest from those between Thursday and Friday, the top ones over here, the open interest went down. So these top calls are actually more bearish, but maybe they were bought back on Friday, as we do have this, millions of dollars traded on those days. But then also, considering the open interest changes, those decreases, the volume traded on Friday was more than that change in open interest. So maybe it's people buying back those contracts here. This is, 1,700 contracts that the open interest went down, but then we see a volume traded on Friday of 7,000, almost 400 contracts. So maybe those are net buying, and that's in, the $1 million zone. But if we look at the changes in open interest between Thursday and Friday, we see the top ones, overall increases, and these are calls. Some of them, were on Friday, so take that with a grain of salt, and a lot of them were out of the money calls that closed out of the money. So it does make sense that there was volume on there. So I take that data with a grain of salt. The one I would say has a little bit more credibility is the $40 call because that is not yet expired. That expires this upcoming Friday, and that has seen, increases in open interest. And then the next one on the list is going to be a $35 call, out of the money, but more reasonable to be closing in the money. It's also seen an increase in open interest. So that is some encouraging data, I would say, over there. But yeah, now let's switch back to the information here. But I'm going to take another sip of some water, catch my breath a little bit. All right. And so the next one on the list here is going to be the Hycroft Mining, ticker symbol HYMC, $3 call expiring May 16th. And this is one that I do hold. This is one that I do plan on exiting if it does get above my my position average, which is 47 cents. And, I've just, and unfortunately, over time just gotten a little too heavy in this one. I think I got about 10 contracts. I'm not really sure. We can count these up. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I'm risking, $470 on this. This expires in May. It did close, at $2.11 and has really been hanging out around, $2 the past couple weeks. So gets me thinking that this could be a little bit bearish and, this could be a loser for me. So if we do see a spike, I would be taking a very small amount of profit and exiting just because, I just don't think that there's enough real data or money behind this one. I think it's a little too speculative, but I would be adding if it does dip to 20 cents per contract, just getting one more. Unfortunately, on these dips, I believe I had an orders placed for a limit buy there, but it was not filled. And so, yeah, just to kind of get my average down, attempt to get it lower, I'd risk another $20 to do that, but then I would still be planning to exit at, a very small gain. And yeah, and part of the reason why it's like, why wouldn't I do that at just like 48 cents? And the reason is because this contract, it can only be traded in 5-cent increments. And I really don't like contracts that are like that, especially when they're, so cheap like this. So yeah, this is one, I'd look to get out. And if I were to able to get my position average down to 45 cents, I'd cut my, I'd exit at break even, which might end up being a small loss. And that would just be because of fees and whatnot. So yeah, this is one I am looking to get out of just because it's a little too speculative in that sense, a little too risky. And then we can see here the, let's see, the stock price coming down in green there, premium coming down as well. And you can see my position following that. And then we can also see these spikes in volume. They were, only like not even really getting up to one, got above $4,000. That's nothing. It's not enough money behind it. This data is, take it all with a grain of salt, because as we see with these spikes in volume, we see an increase in open interest. So I think that's good. It's just not backed by enough money. It's not even a YOLO. So this is just, I'm sorry, too speculative. And so it's just too risky in my view. Although, I do think it could be going up to $3. Maybe it takes its time and doesn't get up to there until after May. So yeah, I think that this is a good one to pull the plug on. And, hopefully I don't end up taking a loss of, around $500 on this one, because it could happen. This could be one that does go to zero. But anyways, let's look over at the chart. Hycroft Mining, I had been thinking, I made a video about that this was an inverse head and shoulders pattern. Looks like it broke lower and doesn't really look so good. I drew this line thinking it would be acting as support based on the low from the 11th of September and this one being the low from the 11th of November. And that did not hold as support. It looks like it's now acting as resistance. Hopefully we can break above it. We are putting in higher lows here, so maybe that's good. And so with that being said, higher lows in the stock price. Let's see, actually, the low on the 24th was 199s, whereas the low over here was 195. So that is a higher low. And we actually see, let's see, the RSI here corresponding with that day was at 33.14, and we are now putting in lows around 34. So yeah, I mean, it's there's no bullish divergence just yet, but if we hold 195 and RSI dips, that would be bullish divergence. But what we can see here in the MACD, I removed the lines because I tried to send some screenshots to have Grok analyze them, and Grok was always getting the MACD versus the signal incorrectly. I'm not really sure why, but so I just removed those. What we can see is the histogram, and that shows that it's negative. It could be switching to green, and so maybe we are able to break out above this uptrend that has been resistance, but maybe not. And so I do have this alert here at 245. We've traded below that. So yeah, I mean, I think that this is risky. Getting up to around $3 a share could be happening, but if it doesn't get up to that level, that's why I would want to be exiting my position. But yeah, let's switch over to the data here. And so I just got the one contract, $3 call expiring in May. See these spikes in volume, but they are not backed by a lot of money. And what we could see that's maybe a little bit more encouraging is that, as the stock price is kind of, hung out around $2. So, see the y-axis here, that's the stock price, that's in yellow. But then we see the net call and put premium on the right y-axis. And we can see that the put premium has been more or less flat, being a little bit negative, but the call premium has gone up. So we see net call premium going up. So, that is more bullish than bearish, but it's just there's not a lot of money behind it. And so speaking of money behind it, let's look up some other contracts. And so not following the highest volume because that's following the herd of sheep. We want to look at the wolves that have the highest premium. Unfortunately, the highest premium from Friday was only $1,000. So, again, this is one that just doesn't have enough data behind it to make me want to really, be going, heavy into contracts with it or anything. And so, yeah, I mean, this doesn't really tell me anything. Look at changes in the open interest. The premium traded on these highest ones from the change between Thursday and Friday. Some of them not traded at all or very low premium traded on them. But the ones that have increased have been calls, but this is probably going to be more retail because the increases in open interest are just pretty small. This one is actually kind of interesting. $3 call has, increase in open interest of 100 contracts. And that one, let's see, it looks like, this because there was nothing traded on Friday, there's not much data on that. So maybe I do want to actually look at this one. Because these others, it just wasn't even open interest going up by more than 100. So if I look at the data on this one, which I will probably remove from the list here, but just kind of wanted to see what are these contracts going for 5 cents. So yeah, I mean, if you multiply that by, the premium, so 5 cents times about 100 contracts, total premium, it's like $600. It's nothing. So yeah, I mean, there's just not enough data here for me to really be wanting to follow it. So yeah, that's why I plan on dropping these contracts as soon as I basically get to break even or slightly above. But now coming back to the data over here, let's look at the next contract, which is going to be the Intel, ticker symbol INTC, $30 call expiring in June. And we can see from the data here that price has pulled back as well as that premium. And I do have a small position that has, I've attempted to get my average down. Looks like I'm holding 3 contracts and, would be planning to take profits at these levels. And I do have an interest in getting my average down if it were to dip to, let's say, around 60 cents as a low for the contract. But I don't currently have a limit buy order placed because we haven't seen 60 cents. And actually, the lowest we've seen the past couple weeks has been 68 cents. So maybe I would just, I'd want to wait to really see, the dip and take advantage of it if it happens. But for the time being, it looks like the average that's listed up here is 71 cents. And my average for my position is 83 cents. And so I'd be looking to get my average down more aggressively if it goes lower. But if not, I'm happy to swing these 3 contracts at these levels. And then looking at some of the data over here, we see the spike in volume, which was followed by an increase in the open interest. So that is good. That spike in volume corresponds with about $2 million. So that gets my attention. That seems like it's some unusual whales activity. Buy in the dip there, and that open interest has only gone up following that. So, whether it's $2 million behind it or maybe $1 million, a portion of that, some money behind it. We can actually scroll back to see, or scroll down, I should say, that day it looks like November 14th. So if I scroll down, we can see the data from that day. That was, on the 14th, got just about $2 million total premium traded on that day. And that was, 8,700 contracts. And then we saw an increase of, over 7,000 contracts. I should have a comma in there, but I'm not going to mess with it. So that does represent an increase of more than $1 million behind this contract. Well, it's not $2 million. It is more than, 1 million. And we can see here it went from about 25,000 open interest to 32,000. And we are currently, now above 34,000. So that does make me feel pretty good about this. And this also kind of strikes me as being kind of a funny play, like BlackBerry, like that's kind of like a thing of the past. Intel kind of seems like it's a thing of the past as well. They have not pivoted into AI as well as they could have been. But, kind of an interesting factor, that I kind of coincidentally was thinking about this. 4 years ago, I believe in 2021, I had gotten, an altcoin ticker RLC, which is iExec, and they do AI stuff in the crypto space. And they do have a bit of a partnership with Intel. So I wonder if that could be a sympathy play. I do post about that a little bit on X, but not really on the channel. But anyways, I'm hoping to make some money with that one and maybe some money here with Intel as well. Enough about that. I know you guys don't care about RLC, but maybe it's of interest. Let's switch over to the chart so I can get into some of the technicals of this. And actually, before I should note, a $30 call. Why did I pick that strike? That is because of this gap here at 28.87. I could see that being filled ideally by June, but maybe not. And so, that's why I'd want to trim out of my position, especially because we see this uptrend here that would likely be acting as resistance. And that would be, maybe getting to the 24 if it were to go straight up to that level, or maybe up to like $25, $26 level, being some resistance there, maybe also corresponding with like a double top over here around 26.50. Maybe this is like a little micro bull flag. This is going to start going higher, but maybe this is a bigger picture macro bear flag. So something to consider with that. But I think that this could be going up to $30 a share. And, don't have any shares, but, I got that call, one contract, a few of them. And so I'm feeling good about this, but let's look at some of the data in unusual whales. So for that $30 call with that June expiration, this actually looks a little bit more bearish over here, but we do still have that spike of nearly $2 million. Next week, this will be off the chart if I'm just looking at the past 30 days. Following that, we've seen the premium just coming down there, and those contracts have not been sold. They've only increased for this contract. And so that makes me think that there's, more than $1 million thinking that, this is just dip buying territory over here. And so, I've been glad to take advantage of it. And I feel like the thesis will play out as long as I am trimming on the way to the upside. And then just looking at the data over here, we have the stock price from Friday going up a little bit, pulling back, bouncing a little bit. And with that, we see call premium being positive, but being low. But we actually see an increase in the put premium, although it did kind of fade towards the end of the day. And then so this looks, just net bearish on that volume there. So maybe we'll see a little bit of a pullback, and so maybe I'd see an opportunity to add to this at an average fill of 60 cents rather than 71 cents. But yeah, let's just look up some other contracts here real quick to get an idea. But again, not sorted by highest volume. Don't want to be following the herds of sheep. We want to be following the money. And here, looking at this traded on Friday, the premium is in the millions of dollars, majority of them being puts. So is this bearish? Is this bullish? I don't know. It'll depend on if these open interest of these contracts is going up, and we get that data on Monday. But what we can see is one of these puts that expires in January, the open interest did go down between Thursday and Friday by 1,000 contracts. And so that's going to be let's see, about, what's that? This is 45, so $45,000. So that's a good amount of money. That's the open interest. So this is like, almost $10 per contract. So that's $1,000. So trading, this is like, 1,000 per contract, and there are thousands of them. That's millions of dollars. And so that's going down. This one also went down between Thursday and Friday. But as far as the ones, there's not too much data as far as changes in open interest, or there just wasn't that much traded on these other contracts between Thursday and Friday. But if we sort these by the change in those contracts, Thursday and Friday, the top one was actually a call, expires in January. Next one also a put that also expires in January. And so, kind of straddling, that $20.50 to $21 range. And so I'm not sure what kind of straddle that is, or whatever, but, upside, downside. But yeah, so this is kind of, is this more bullish? Is this more bearish? I feel like looking at the data from over here, this gives me a little bit of confidence that this is more bullish. Bigger picture that we're seeing some dip buying opportunities right now. But anyways, pulling back to the chart here, I'm just going to have a drink of water before I get to the next one. Cracking the neck and back. All right. And so the next one is actually not terribly exciting. This is the Luminar, ticker symbol LAZR, $15 call that expires in May. There's just not been that much action on this one, just very, very few contracts. And so I don't plan on following this just because I think that the time frame between now and expiration in May, also with it not being a quarterly expiration, which would be like in June, and that would be for the half of the year. May, it's just monthly. It's just not going to have as much volume, and we can see over the past week, nothing traded on it. So I'm just going to kind of skip over this one. The next one is the $6 put for Luminar, which also expires in May. And so I was just curious to kind of track those two contracts to see if the price does come down to around or sub $6 or $6.11 was kind of the level. We'll go over in the charts in a second. So I was curious if it'd be coming down to 6 or if it'd be going up to 15. We came down to 6. And, so while there wasn't much volume traded in the past, buying the contract over here on, let's see, December 13th, so just above Ed's head there, that was at $1.89, so it cost $189 for one of those contracts. Considering the moves that we saw over last week, the holiday week, and really the week prior to that, we saw premium go up from $189 to as high as $240. And so, could have made money swinging this as price went down from, 642 to around $5. So yeah, but I think that the more open interest now, only 23 contracts, I feel like that's probably more so retail being late to the party. And yeah, so I just don't think that this is a useful one to be tracking. But since this one, this part of the thesis was fulfilled, the drawdown, I think a more interesting contract to be following is going to be the $15 call that expires in January 16th of 2026. So this is a leap. And so I'll go over why I think a $15 strike is appealing. And I have to say, I do not have a buy order placed on this one. But if it does dip to a low of, around $1, so that would be $100 per contract, I would then consider picking one of those contracts up. So far, it looks like the lowest it's been traded at is $1.14. And so we'll see if that changes over the course of the next week or two. But yeah, I just don't see this one as being too exciting just because the open interest, only 15, whether it's people or, positions, various positions that add up to an open interest of 15. It's just not that exciting. So it's probably less than 15 people that I could be trading with. And actually it might be, let's see, a lot of them being, on this date, 114, the open interest spiked by about 10. So about 2/3 of the open interest could be, just one person who traded on this day. So just not a lot of people to be exchanging with for this contract. And that is why I would look for something with a leap contract, going out more than a year. Because I just think that trading monthly contracts or even the quarterly in less than a span of a year is just going to be too risky with a stock like Luminar. But yeah, over here, just not too much data to be going over. I think the more interesting stuff is going to be looking at the chart. And so, yeah, I had talked about a video I believe I put out on reverse split day, which was November 21st. You can check that video out. You can see a link to it in the spreadsheet here. So check that out. And in the video that I just put out on December 27th, it makes me think that, the bottom could be in. And so anyways, during this reverse split video, I suggested there was a possibility that price could be coming down to 611. I did not expect it to happen, but surprise to me, we came down to a low of $4.93, and I do feel like that could be the low. We could be seeing this breakout as long as 448 is held. We don't want to see any wicks even going to below that level because that would suggest that the momentum in this move has kind of been lost. We want to see this gap be left behind. So let's see that. Just like we saw this gap left behind up here, there was momentum to the downside. We want to see that being filled now moving forward, and that is right around $15 a share. So that's why I picked that price. That gap would be filled at $14.70. But I think leading up to that gap, I think we will see substantial amount of resistance in the range from around $10 or maybe $9.70 up to around $12 or $12.65. And so I would, as far as shares that I have, I would look to get my average down to that level to then trim and or exit to then buy back on a pullback once we, hit that resistance there. So something to consider. But yeah, $15 a share, I feel like in the span of the year, price could at least be moving towards that level. And so I think that swinging a call might be a nice idea. But anyways, let's get into the data. So I'm not actually going to go over these two just because I think they're a little boring. So I'm actually going to, I can't exit that one out, but I will exit this one out from the list. So this, I'd have to refresh it to remove it. So I'm not going to do that. So let's just look at the $15 call that expires in January of 2026. And we can see, spikes, like I had shown in the spreadsheet. Actually, maybe I didn't really go over it in too much detail. But yeah, spikes in volume, but really, the dollar amount behind them, $1,000, so nothing too crazy. I think it's really just being early. This is the beginning of it. But what we can see from Friday for Luminar as a whole is as the stock price went up but then pulled back and consolidated, We see net call premium increasing, whereas net put premium just stayed flat. So that was overall looking bullish as far as the volume goes, with increases in the net call premium. So that does look good. It does make me think that we have put in a bottom at 493 or whatever it was. But yeah, just looking up other contracts just to get an idea of other ones. But again, not by highest volume, because we do not want to be following the herds of sheep. That volume, we want to be following the big money, the sheep herders and the sheepdogs, the wolves, whatnot. And so sorting by premium. Again, not a lot of money behind these, highest as 62,000, but what we can see from the premium traded on Friday, majority are calls. Really, all of them over here are calls. And that's actually not too surprising, since it did hit all-time lows. Does kind of make some sense, but we don't need to know if these were being bought or sold. But what we can look at is the changes in open interest. And so that would be between Thursday and Friday. We'll get the data between Friday and Monday during pre-market on Monday. I just don't have that data just yet. But what we can see is so we got almost $5,000 traded on Friday. So that's, of interest in that sense, considering not a lot of money traded on this one. But the biggest increase in open interest between Thursday and Friday was 4,000 contracts, which was a $5 call. So it's in the money, so kind of a safe bet. And this is also a leap going 2 years out into the future. So that seems like it's a bullish but conservative bet. But, increase of 4,000 of these contracts at, $3.10, let's say, from the low. Let's see how much premium was traded on Thursday. So I'm going to ditch these other ones. I'm going to look at that one. But just what we can see, hundreds of contracts traded here, generally increases between Thursday and Friday. So that is overall net looking good. But if we just look at this one contract, just to look at some of the details from it, we can see that between, let's see, Thursday and Friday, over $1 million total premium. And so that was a, let's see, volume traded on that day of 4,000, nearly 500 contracts. And the open interest went from about 50 to over 4,000. So this to me means that there's about $1 million going long this contract in the money. So it's a safe bet with it being a $5 call, but it is kind of expensive, being around $300 plus to pick up one of those contracts. But yeah, I think that's some interesting data there. So just, wanted to share that with you guys. But let's get back to the spreadsheets over here. And so this is one I'm going to go over, which might be, one that's going to be a losing trade. So we'll see. I'm a little bit nervous about it. But this is going to be the Mara $35 call that expires in March. And so this is 3 months out, not 6 months out. So a little bit risky for me, at least as far as I like to manage my risk. This is one that, I kind of too aggressively bought it as it pulled back 3 days in a row. I should have waited, but I have been disciplined. I was thinking about actually, placing a limit buy, or, just kind of keeping an eye on $1 if that gets hit. But the low from Friday was 106, so it has not yet been hit. But I was thinking, rather than waiting for a premium to be hit, I should be thinking about a price to be hit. And so I think that the price of Mara, which closed on Friday at $18.44 for the share price, closed at $18.44, I think that it could be coming down into the 17s. Where exactly would it bottom? Maybe 17, maybe 17.50. I don't know. Maybe 17.80. But yeah, I would just be keeping an eye on. I have an alert set at $17.69. And so if that is hit, or, if this is getting, well below or well into the sub-dollar range for this premium, then maybe I'd more aggressively get my average down, which is currently at $2.08. I have 3 contracts, so I'm risking more than $600 on this one. So I don't really like that about it. But considering my trimming scheme, since I have 3 contracts, I would normally be trimming at 20, 80, and selling at 100% profit. I now have my, not stop loss, but I would take all profits off the table at 20% gains. That'd be at $2.50. Just because I think it's too risky, at least for me and how I manage my emotions, with March just being a few months away, now that we're just about into the new year. And so, yeah, also, yeah, I mean, I feel like this one was, I was a little bit too late to the party, top over here in the stock price pulling back. But, I think that Bitcoin can be very unpredictable. And with that, we have seen some consolidation following a pullback. And yeah, maybe it's just to be shaking people out of their positions and it's going to be rallying higher. And with that, miners could be going higher. So I do feel like I will be able to make money with this, but I also think it could be going to zero. So this is definitely probably the riskiest one of my plays. But I think that, Bitcoin can be unpredictable. So maybe I'm able to get out at a 20% profit or maybe, 10% profit or break even and not lose $600. But anyways, enough rambling about that. You can see my position there. We can see these spikes in the volume, which corresponds with, $2 million, $2 million over here. Following those, we have seen, pretty, not necessarily steady. We have seen some pullbacks in the open interest, but overall general trend is that the open interest has been going up. So I do feel good about that. That does give me some confidence, but I, do think that this one is risky and that, I might be losing some money on it. But that is why, I have this kind of plan here. And so why do I think 1760? Let's flip over to the chart so I can go over that. So I got a bunch of levels here, probably too many to be going over. And I think one of these, I feel like there was one that I wanted to adjust. Maybe not. Oh, yeah, maybe actually I just want to delete some of these levels because they haven't acted as support. And actually, what I might want to do is, yeah, actually, this one, I don't think that this is, a useful retracement. We've already broken below the 618, or no, the 786, I guess, is... That's, yeah, the 786. We're already below that, so I don't really think that this retracement is going to be that useful. And so maybe this one on the bigger time frame or bigger scale, going from that low of 1370 up to the high of 3028, maybe that one's useful. And the reason why I feel like I was kind of aggressive in buying those calls is because I was hoping, hope being a 4-letter word, that we would be holding right around 20, which is basically the 618 at 1971. We've actually broken below that. And so I could see price coming down to maybe the 786, but also I could see that the 786 being at 1683, that being a little bit too greedy of a dip buy zone, especially with this yellow uptrend, which goes back to the lows of 2023 at around $7.16. Don't we all wish that we were holding a bunch of shares at that average right now? That would be great. But anyways, just drawing that uptrend, you can see that there were some fake out breaks of it. But generally, I mean, it has held to that, bear market, or that wasn't bear market low. I guess, kind of tapping back to this, bear market low, I imagine 2022. Yeah. It bounced there. And then here, this uptrend, I think that we could be finding some support around that yellow uptrend. And maybe that would be above 1683. And so I got 2 alerts here, one at 1769, as I had mentioned in the spreadsheet, another one at 1683, corresponding with that 786. And so those are levels where I would probably more aggressively be adding to my call position to aggressively get my average down to then, exit effectively at break even so I don't lose money. So it would be kind of like really lowering the risk at that point, taking the risk off the table. But yeah, and I'm long Bitcoin and stuff, so I don't need to be taking advantage of Mara. But I just thought that this was kind of a fun contract to be swinging. But with that being said, let's look over at some unusual whales data. Oh, actually, before I do that, though, why at 35? Why did I pick that level? That would be because, the high over here, right around 34.09. And so that is why I picked 35 as a strike. But March is just too early of an expiration. So I'd probably want to be looking at something into June, especially because those contracts are going to be getting cheaper. So let's go over here to the $35 call that expires in March. Over the past 30 days, we've seen this, increase in premium and then a little bit of a drawdown. And, the data over here for all of them are premiums. Now, there's contracts, I should say, is that as stock price did come down on Friday and kind of leveled out. We see that the net call premium went negative, so there's selling of calls, and the net put premium also went negative, but overall it was more bearish than bullish, and we can see this volume here reflecting that. So that does make me think that the stock price could be going lower, getting into the 17s, maybe even the 16s, and so that is why I would want to wait for the dip and not so aggressively add just because it's around $1. It might be dipping into, maybe the 50 cent or 80 cent zone. And so that is when I'd want to try to get my average down to then exit. But what we can do is look over at some other contracts to see what, not by highest volume because that's chasing sheep, but looking at the premium, nothing in the $1 million range. We do see the top ones were calls that are out of the money, expiring, in January of this year, and then this one's a leap, January of the upcoming year, and this one's January of 2026. But then we also have some puts there, but we don't have the information on whether this premium was for increasing contract position size or decreasing or selling. That will come out before Monday open. But what we can see is these top two, which were calls between Thursday and Friday, we did see open interest increase. So that is kind of reassuring there. But if we do sort by the changes in open interest, that would be between Thursday and Friday. The most, it does look like they were, calls and puts. So it's kind of, a mixed bag here. We can see that the one that had the most volume this would be from Friday, so this data is going to be from Thursday to Friday. We can see that these puts increased a good amount. I feel like it's more, I think it's probably going lower is what I would think from this. But anyways, that $35 strike, and I want to look at something that's, June, or actually because I'd be establishing a position soon, maybe I want to look at the June strike call, and then look at the $35 strike, and I would add that to my list. And then maybe I would also want to be looking at the same strike, and that being a call, but maybe extend it out by, another quarter. And so maybe I want to track these two maybe into the next video, but this also does look bearish. We do see, the same kind of patterns. If we look at the premiums traded on this one, nothing in the $1 million range. This is for the September expiration. Let's see, the June expiration do have some in the $1 million range. That was an increase, so maybe some encouragement there. This was around 4,500 contracts open, and that since increased by about 2,500 to 7,000, and that has held. So this does make me feel a little bit more confident. And so, that's probably the spike here being over $1 million. So yeah, maybe that gives a little bit more confidence, but between now and March, I don't know, between now and June, feel a little bit more confident that the bull market rallies that we're seeing in Bitcoin are not yet over. But anyways, coming back to the list here, let's look at NEO, one of my favorites. This is the NEO $10 call expiring in May of 2025. The reason why this got popped up on my radar is because of this $1 million orders that were placed on that. sorry, I should say total premium traded on the day of millions of dollars. And we can see from that data, if I scroll up so Ed's not blocking it, we can see that on these multi-million dollar days, the change in open interest following those days was an increase. So that suggests that million or millions of dollars was going into it. Volume on these days was, 36 to 41 in volume. And we saw, that going up. So that's over $1 million, going long on NEO for these contracts. So that gives me a little bit of confidence. And we can see that the boost here, that was, 40,000 contracts and then 36 the following day. I don't need to have the data highlighted, but that corresponds with, over $1 million over here in that blue premium. So that does seem good. And following that, we've seen the open interest stay high. So that does make me feel good about that. But, with this one, it looks like I have, I believe, 6 contracts. So, over here. And so I would be trimming at break even, which is not too exciting. And I would be adding, it does look like I have an order placed, a limit order to buy one more contract at 20 cents if we do see a dip. And then looking over at the other contract, which I'm very heavy in this one. So yeah, maybe this one's a bad decision, but I do have plans and I have been trimming at, modest profits, whether that's break even, losing 56 cents on these two, or taking some profits. So net gain over here. But yeah, I have tons of contracts. I kind of even, made this color scheme. I don't even know if these numbers are correct anymore because, it just doesn't matter. And my average for my positions, which I've got over, I think around $700 into this position now. My average is 51 cents. The low on Friday was 39 cents. And so I do have a buy order to add one more just to get my average down maybe to 50 cents. It would be pretty small. But, that with that being said, when I had trimmed here at break even, I sold one at 51 cents and then bought back at 45. I had sold another, let's see, over, I guess this was 2 contracts. One of them was at 52 cents, so effectively, break even at that time. I could potentially be buying that back, here like I did at 50 cents or maybe here at 40 cents. So lowering that risk by trimming at break even is allowing me to get more contracts or get add to my position. With, taking some off the table, some of that risk off the table. So I like that strategy, and I think that I will be able to make hundreds, if not thousands of dollars on this whenever China releases their stimulus, which is kind of, what I'm waiting for, and which is why this video on, believe in NEO, technical levels and a stimulus. I recommend checking out that video. I think it's a good one. But yeah, this, we could see this big spike over here, and this kind of gave me confidence all throughout this time of adding to my position as the stock and premium was going lower. But yeah, that open interest following that has only gone up. So this does give me some confidence. But let's look over at the chart so we can see that, bigger picture. We've just really, been breaking lower. I go over it in the video, so I don't really want to spend too much time on it over here. But, I'm hoping that we're holding this uptrend. We had some news on stimulus, and then this takes off, goes up to $8 a share, and I make bank. So that would be great. I am not in love with the contracts. I will be selling them ideally at hundreds of % of profit, but I do have some shares. And, I will probably be taking some profits on those as well. But let's swing it over to the contracts over here. I'm, spending too much time on this video. It's over 2 hours now, so I'm probably just going to zip through this. Did kind of go over this data here, both of the contracts in my spreadsheet, but looking over the data from just the 1 day here, the net premium, this actually looks like we might be seeing a little bit more of a pullback, so hopefully I'm able to get my averages down on those pullbacks. We can see that as the stock price in yellow pulled back a little and stayed low throughout the day. We see that the net call premium went down and was negative, whereas the net put premium went up a little bit, was positive, but then came down to about break even on the day, around the 0 line. But overall, we see that the volume over the course of the day was net bearish. So not looking so great in that sense, but I think it's just like dip buying opportunities between now and May and June. Let's see, I want to look at NEO, so I'll just search that here. And from this, avoiding the high volume, following the herd of sheep, switch over to the premium, hundreds of thousands of dollars, but don't know if these were going up or down between Friday and Monday. We'll get that data on Monday before market opens. But what we can see is a lot of these are calls, so that makes me feel good. They're also not, Friday's expiration on the 27th. But we can sort these by open interest, and it does look like the highest one, not surprised, was one that expired on Friday, and that was an out-of-the-money call that expired worthless. As you can see here, because it's so cheap doesn't mean you can make a lot of money. It just means that you can lose that small amount of money you put into it. And so hopefully people exited and took, their 1 cent off the table, but maybe not. Anyways, the ones down here expire in January, so maybe a little bit more interesting. And these open interest was between Thursday and Friday. These people lost money on that trade, unfortunately. But these over here, between Thursday and Friday, we see open interest going up. So, I feel like that's good. And this one, we see a volume of, over 9,000 contracts traded on Friday the 27th. And these, of course, do expire, as well as these expire this coming Friday on the 3rd. So a little bit risky there. So those could be losers, especially because they're out of the money calls that expire within a week. I don't like to play contracts like that. If you do, though, you do you. And then the next one on the list is going to be OKLO. This is the $40 call that expires on June 20th of 2025. I'm not going to go over this in the spreadsheet just because, I don't have enough time to be compiling all of the data, and I don't plan on getting in this one. I just think it's interesting to watch. But before I go over to the options data here, I'm going to go over the chart just to get an idea of, this looks like we got this big bull flag, and I kind of view this maybe pullback. Maybe we're going to start to see that pullback now. Maybe this orange line gets shifted over. And then maybe that would be a time when it's like, okay, now I want to enter. But I think really a couple weeks ago, that was the time to enter here. And and so from this level here, it looks like I drew kind of levels that might be acting as support to the downside, and the 50% around 1673 looks like we got lows just above that around 17. Let's see, the low of 1721 on the 17th. That would have been a great time to add to this. But this one, I have to say, the contracts are a little bit too pricey for me, so I haven't really been too interested in it. But thinking about the contract that I am curious to follow is the $40 call that expires in June. Why would I pick $40? So if I just adjust the axis here, that is going to be based on, I've got this, this Fibonacci extension that, let's see, includes this 100% here. So I think this is just to symbolize a breakout there, and I think this was just where the bottom might be found. I think the bottom has been found. But anyways, going over this is a Fibonacci extension. And so effectively like the measurement from the low of 535 up to the high here of 2812, that measurement, that same like dollar amount move from the low here would bring price up to right around $40, $39.91. So that is kind of why I'm interested in that strike, that contract. And so what we can see here from the data is that the premium has come down. Like I said, a couple weeks ago would have been the time to buy, and then it bounced. Maybe we're seeing a little bit of a pullback. And so, I'm wondering if, especially with this, volume being, net negative, being bad or not being so great, we see the stock price come down. Net put premium increases throughout the day while net call premium stays flat to, it looks like not necessarily negative, but it's Yeah, I mean, just a little bit negative, but not substantially. So this is really dominated by put positions being opened. Scrolling down here for this contract specifically, whereas this one was, all of the data on OKLO. We don't really see too much traded, not like millions of dollars, but total premium traded on Friday was like $178,500, but we don't know if the open interest is going up between now and Friday. I suspect based on this, it's probably going down a little bit. But yeah, scrolling back, no like $1 million orders or anything. So to kind of get an idea on some other contracts that might be a little more exciting, let's just search OKLO up here. Not looking at the highest volume because that's following the herd of sheep. We want to look at the premium. That is the money at like $1 million. And so on Friday, looks like the contract that put contract that has the strike of $22, which is an out of the money put, expires in a few weeks for the monthly contracts of January. We see that it's like the open interest for this contract between Thursday and Friday went up by about 43, but generally you got about 5,600 contracts traded on Friday, but we don't know if they went up or down, so we'd find that out Monday during pre-market. But yeah, the two top contracts from Friday were puts, so while it could have been sold, and so maybe that's suggesting bullish action, but we don't know yet. We can't really speculate. Generally, it looks like, some puts, some calls. And so I think the way to not really speculate is by looking at the open interest. And so this would give us information between Thursday and Friday. And so the biggest increases between Thursday and Friday were calls. And so I feel like this is overall more of a bullish sentiment. Maybe the puts here are just, hedging or, maybe they're being sold. But these two puts, these were actually, expired on Friday the 27th. These were, these expired in the money puts. And so these people were buying these. So maybe they made some money on them, but, maybe they didn't make that much. So that's something to consider with that. But yeah, now let's get back to the spreadsheet, and I'm going to go over the next one on the list, which is the plug $3 call that expires in June. This is one I was going to remove from the list as I had been trading it. I took some profits. I walked away. But, I'm thinking about re-entering because my average was 36 cents rather than, FOMOing and buying when it was up here. I was like, no, I'll just wait and I'll just kind of watch it because I do have some shares in Plug. And to be honest, I kind of like to get rid of the shares and just trade contracts, or at least, get rid of a lot of my shares, just trim my position down, the size of it, because I just enjoy trading contracts more. And if this pulled back to 36, I think Plug could be going back up to near $3 a share. It does look like that's the top of the axis over here. And the highs, at least for the closes, were lower than 280. So, not looking so good in that sense. But it has been, if we look at the stock price just based on the closing prices here in green, it has been forming higher lows and higher highs. So that is in an uptrend. Maybe that's good. Maybe it breaks to the upside, but also could break to the downside. It does look like I have a buy order placed at a limit price of 36 cents just for one contract to reestablish my position. It does look like the amount of profit that I've taken from selling these contracts has been more than $36. So I'd be risking no more than what I've already made. And, then I just reevaluate if that does pull back to that level. But yeah, just what we see here with these spikes in volume, the highest one is like 20,000. So it's just really, not that notable. But what we do see that is encouraging is steady increases with a little bit of a pullback here, a little bit of a pullback here as well, but general increases in the open interest. So that suggests that people are going long with these calls. But yeah, let's look over before getting into the data in unusual whales. Let's look over at the chart. Why would I pick $3 for this as the strike, and why would I want to re-enter? So looking over at this chart, I find this to be kind of a cool little example. It was probably during a stream, or maybe I did it during one of these options videos. I just drew this kind of box here saying, I'd like to see some bullish consolidation here before a breakout of this uptrend, and we got multiple tests of it. We did form higher highs here, and with that, if we look at the RSI, it was kind of flat, so there's a little bit of bearish divergence there, but actually the high from this day in the RSI was 62.81 versus the high in the RSI over here on this day when it hit $2.86. That was 64.52 versus, like I said, 62.81. So yeah, this is a higher high, and this is a lower high. And so that is technically 62.81 versus 64.52. Sorry about that. That is a higher high. So there's no bearish divergence with this. And so I do feel that this could be a bull flag. This could be breaking out, and this could be heading up towards, if not to and beyond, 292, this gap here that needs to be filled. And then it could potentially be going up to like 330, maybe around $5 a share, but maybe not. It's been just kind of a painful, long process moving up here. And so, I want to be making money on these trades, not just holding them and hoping to make money. And I just feel like this is just too slow of a mover for me. And so that is why, in all honesty, I've been trimming my shares as it's been around here. Could have made more, but also, I have less risk in it, so I'm less emotional about it. And yeah, so I do definitely think that this could be going up to $3 a share. I think it could be going a lot higher than that. But, my goal is to be stacking small gains in a short amount of time, not hoping for large gains over a long period of time, because that's hope. That is the, 4-letter word. And so if I'm able to take profits that are 10, 20% gains in the span of weeks, that's much better than hoping for hundreds of percent gains over the span of months, years. That just doesn't work for me. Realistically, I need to be taking profits. And so that's kind of, what I'm doing with this. But generally, yeah, I think that this is looking good, although it's just taking so much time. And, maybe something happens in the world and the market turns around and this tanks. I don't want to be having the risk on the table. Longer you're in a position in the market, the more you're exposed to risk, to a black swan event. And it's just not really worth it to me. And I am able to trim in the green, so I have been doing that. And also, selling covered calls, stuff like that. But anyways, let's look over at the data from unusual whales. I have to say I'm getting a little tired, so I'll probably start going through these a little quicker. But yeah, kind of, went over this data, have gone over it before, spikes in volume, but it's just, the amount of money, 20,000, not too substantial. Looking at the general plug contracts, we see that, as price kind of came down on Friday, that the net call premium went up a little bit, ended up being net green, whereas the net put premium went down. Even though it did spike up towards the end of the day, it went more negative. So generally the volume is more to the green side. But if we just search plug power up here, I can get an idea of some other contracts not following the highest volume, the herd of sheep. Want to be looking at the premium where there's the most money. And again, the most money, it's like $60,000. It's not hundreds of thousands. So it's not really too exciting. And then, looking at these, I'm just going to sort by open interest so we can see the change between Thursday and Friday. One of these expired on Friday. That was a $2.50 calls that unfortunately expired out of the money. And these were people buying them, hoping for a big win from a low buy. And so those are just risky. So take that with a grain of salt. That open interest, those all went to zero. This is a $2.50 call that expires this coming Friday. In my view, also a gamble. I don't like to trade contracts that are in the span of a week. But between Thursday and Friday, the open interest went up by about 1,600 contracts, basically doubling. And but there's also some puts in here. But yeah, the majority is calls, but those are also speculative, expiring pretty soon. And also all of these being out of the money calls. So, and expire within the next month. So being very risky. So take it all with a grain of salt. But yeah, let's come back here to now look over QuantumScape. And so this is one that I got in based on my, plan. I should have taken profits at 20%, which would have been at 69 cents. But I only have 2 contracts, and I do feel like this has a lot of potential to be breaking out between now and June 20th. So I feel like I could be making 100% gains to 300% gains, or that would be like a 3x, or no, that would be a 2x for gains, or no, that would be a 300% profit. And so I'd be turning whatever the initial investment into, so 58, and then that goes to, whatever that times 2, and then, a couple more 100%. 300%, I'd be turning $58 into 231. That will be great. And so I have that left alone. 20%, I have changed that now to a stop loss. I should have trimmed at 20%. I could have exited at 40% gains, but I just don't want to exit. I kind of want to play this one because I got 6 months before it expires. And so if it does pull back to 69 cents, the low on Friday was 66 cents, but it did close up higher, going up higher around 70 or so, 70 something. I know maybe I forgot to say this is the $10 call that expires in June. For this one, I would stop loss out of that, and then I would buy back either at my average or lower. And so, that's just like, I want to be managing risk and I want to have cash on the side. So that's just kind of a way to do that while also taking profits. Nobody ever went broke taking profits. And so that's kind of my strategy here. And I think that this does have a lot of potential to make some nice gains while also not having too much risk. But anyways, we see that, the stock price looks like it's maybe broken out here. The premium's gone up and my premium's down here. We do see some spikes in volume, which correspond to, 100 plus thousand in premium. So it's good. It could be looking, more juicy, but, it's still not too bad for a stock that's trading in, the $6 range. And with those spikes that we have seen increases in the open interest, although we have seen some pullbacks, but overall, this has generally been going up, but we did see, like I said, some pullbacks more recently. But let's look over at the chart real quick. And so with this one, this is one where I think I referred to the Bronx Vikings analysis on this, going back to this high over here, which I think is similar to, one of the other ones that I covered, which might have been Intel, something looking like this, or maybe it was BlackBerry, I'm not sure. But we see this downtrend that was resistance, broke out of it. And so now potentially forming a bull flag to be breaking higher. Why would I pick a strike of $10 a share if we take a step back? That would, be coming back to, let's see, around the highs of here. So maybe I should, these lines, I don't know why I have these dash lines. This is kind of like an old style that I used to use for drawing these lines. These things here, sorry, just cleaning this up. I don't need to have them on the chart. And actually I'm supposed to go on a hinge date maybe in like 45 minutes, so I should check my phone real quick. This high is like a 10:03, and maybe that is a level to be price could be going up to. And I'm actually gonna I'll finish going over QuantumScape and then I'll check my phone. That's basically the level I think this could be going up to. Let's look at the data from QuantumScape over here. Generally, I'm just going to rush through these because I've been streaming for 2 hours and 20 minutes, or not streaming, but recording for 2 hours and 20 minutes. We see the price come down, call premium go up, net put premium go down. So that's overall bullish, as you can see some green there. If I do search the ticker over here, we can get some other contracts. Let's see. Sorting this by premium because we don't want to be following the sheep. We want to be following the wolves. Almost $1 million calls, so lots of volume or premium traded on the calls. Whether they're buying or selling, I don't know. But looking at the chart that I just showed you, it was more green, so that suggests buying. And then if I switch to changes in open interest, this would be between Thursday and Friday, we can see that a lot of them and that are not, expired just yet. Only this one, was the expiration that just happened on last Friday. This is upcoming Friday, but overall increases in the open interest of these calls. So that is overall good. So yeah, and I'm going to now switch back over to here to go over to the next one, but I'm just going to have a drink of water and then check to make sure if I do have a date planned or not. So just 1 second, sorry. There are timestamps, so no complaining. I put a lot of work into these. Oh, yep, I got a response, and so let's see, is she still interested to meet with me? Let's see. I'm sorry for bailing on the plan. I actually have to take care of some work things first. And I'm just going to respond to her, no problem, so she knows it's not a big deal. But yeah, yay online dating. Oh well, what I might do though is maybe I treat myself to a happy hour just to have some fun with that. So that's actually a good idea. I'm in the Midwest, so a little risky, but this happy hour... I was like, my neighbor has like a roof that sometimes looks white. And I was like, oh my God, is it snowing? It's not snowing. But they have oysters that are pretty cheap. So maybe I would take advantage of that, grab myself a drink that ends in an hour and 45 minutes. So I got some time, but I got to take a shower before I go there. And so I'm going to just be talking fast like that until I get to the next one, which is RIVN. And so this is the $15 call that expires in June. As you can see, I had previously traded this one, but with price being right around or just below $15 a share, I kind of pivoted from this one into a different contract, being the $20 call that expires in June. And yeah, so I'll just go over both of these briefly. It does look like I have two contracts, or two of these contracts with an average at $1.38. And I would consider getting another contract if it dipped to $1.10, but I do not have a buy order placed for that. And I am not following my rules with this one. I would plan to trim at 100% profit and a 200% to profit, which that would be, yeah, that would be a, this is a 2x, this would be like a 3x, I guess. The math with this is 100% gain, but it represents a 2x. Always kind of confuses me a little bit, kind of a tongue twister. But yeah, I mean, so for this contract, the $20 strike, we see this big, massive spike in volume that corresponds with $1 million. Following that, we see the open interest going up, so that makes me feel really good about it. And yeah, and so I've got a small position in this one. This other one, I just think that it's a little too pricey with the premium, and I was thinking about maybe adding at 220. But no, I'm just going to focus on this other one. I can add at, half the price. So I'll do that. But yeah, I mean, we do see this, another spike in volume over here corresponding with over $1 million. Another spike in volume corresponding with nearly $2 million. See the open interest increasing. And yeah, so I mean, that looks good. So no worries. So no worries there. I'm thinking about responding to this this date, but yeah, doesn't matter. But yeah, this looks good is what I meant to say. RIVN looks good. But let's flip over to the chart real quick. And what can we see here? I am not sure. Oh yeah, when did I? This yeah, I got these levels to the upside. I don't know if I want to adjust them or anything, but really just generally we got like kind of a convergence of levels up here around 22. Also some around like 19 or so, or convergence, a lot of levels. Those also correspond with the high over here. So maybe I want to put, a line there at 19. So I think price could be going up to around $20 a share. Is this a bull flag or is it fading? I think it's probably a bull flag. I think it's going higher. This is just to shake out the weak hands in my view. And so, yeah, I feel pretty good about RIVN. And this is also one I should note that I do have some shares of that, on pullbacks, I add a little bit too, but I don't really want to get my average up. But it's kind of a small position. But yeah, buy more on dips. And if it goes too low, then there's a stop loss. I don't have a stop loss, but, theoretically I should have one. And so, yeah, let's look over at the data over here. So the $15 call, I'm actually not really going to go over that, really just going to go over the chart here. We can see that as the stock price came down on Friday, but then kind of consolidated, the call premium came down, the net call premium came down, whereas the net put premium went up a little bit, but then pulled back, kind of being around zero, but ending up net positive. And it looks like there was more of a selling of calls. And so we see overall the volume here was more bearish than bullish, but maybe that's just a good dip buying opportunity that we're experiencing or could be coming up. But yeah, rather than going over this, actually maybe I do want to mention that, yeah, $1 million, already mentioned that from the spreadsheet that I put together. So yeah, I'm just going to search RIVN up here. And so don't want to be following the sheep, the highest volume herds of sheep. So I'm going to go over to the premium, and we see $1 million order. This was actually a put, but don't know if it was being bought or sold. This expires in February, so there is something to it. That is an in the money put. Not sure if they bought or sold, like I said. But if we want to be sure, we can look at the the highest changes in open interest between Thursday and Friday. We'll get these numbers out before Monday for the contracts that traded on Friday, like that $1 million order, not $1 million order, but $1 million in premium traded on this one. And so, yeah, just sorting by open interest, we can see that the most open interest traded between or increases between Thursday and Friday were on calls. And the one that was a put was a put that was in the money, or that was out of the money, expired out of the money. So, of course, there's going to be a lot of volume traded on that because people lost money. This one went to zero. But these other contracts, yeah, those are calls. So I think that is, overall a good thing regarding RIVN. But now coming back to over here, let's look at TLRY. So this is a $2 call expiring June 20th. This is one I'm not going to be covering in next week's video. But if you do want me to cover it, let me know in the comments. This is one that I did swing for a very, very small profit. I could have 2x'd. But, I exited just above my average here at 17 cents. I sold at 19 cents. So made a very small amount of money, after fees and whatnot. If I would have held for, just a couple more weeks, I would have more than 2x'd, just looking at the highs or the averages over here, 2x, that average that I had. But yeah, we saw, price go below the level that I was expecting, which was $1.42, which is what it closed at. And yeah, it just resided below it for too long. That was a dip buying opportunity. Spikes in volume correspond with open interest going up, so that looks great. But if we look at the spikes in volume, they're 20,000, highest 50,000. So it's just not enough money behind it to really give me a lot of confidence. I could have 2x'd, but I didn't lose money, and that is the key. And this is just too speculative for me to be watching. Right now, I'm taking time going over it. Time is money, time is energy, whatnot. So yeah, I'm just not going to be covering it moving forward. But looking at the chart, or maybe I will if maybe it pulls back to a level. And so let's look over at the chart here. So yeah, I had this thesis that I was in this falling wedge, but then it broke below, and maybe it could be pulling back to, I got 142 marked here. I actually probably want to change that to, let's see, pulling back to like maybe 132. So I want to adjust this by a little bit lower, and if that gets hit, then that might spark my interest to maybe it's pulling back to find this downtrend as support. And then that would be like, this is a fake out breakdown. This was a fake out breakout. And so right now we're seeing potentially a breakout, but that would then need a retest coming down to 132. That could maybe be the bottom before it takes off, going up to around $2 a share. This gap here is at 199. So that's why I have the $2 strike there for, expiration in June. But yeah, I am not in this, and I don't plan to get back in, but I do have that alert there. And so let's just look at the data here. Not really going to go over this, just looking at the data from Friday for the stock price. We see it come down, kind of consolidate. We see the net call premium go up a little bit, but even with that, we see the net put premium going down. Generally, it looks like the net volume was red throughout the most of the day. Maybe it ended green. I'm not really sure, but overall looks like a lot of red. So not so great. Maybe a little bit concerning there. But if we just look up TLRY here, we can see don't want to be following the highest volume. Don't want to be following those herds of sheep. We want to be following the sheepdogs, the sheep herders, the treebeard, and the wolves and whatnot. And so sorting by premium, we can see that, highest premium on Friday was, over 100,000. So not looking so bad. These are the monthly expirations that expire in upcoming January. And it's $1.50. So both of them out of the money, this being the $2 call. And it does look like between Thursday and Friday, there's net selling on this one, net buying on this one. But yeah, let's actually search or sort by changes in the open interest. That would be between Thursday and Friday. And we see, buying, net buying of calls, $1.50 nearly in the money, but currently out of the money. And then $2.50 strike. That one seems a little bit ambitious to me, but buying on there. But if you do the math on these, an increase in, 1,000. So let's say it's like 100,000. Well, let's see. 1,000 times like $18. That's like $18,000. There you go. That's not, a huge amount of money. So take it with a grain of salt. There's not a lot of money behind this one. But I do think that, like, as far as shares go, this could have been a great dip buying opportunity, to maybe set it and forget it type of deal. But maybe we see a retest, like I said, of 132. That might be a dip buy for calls or, more shares or whatever. But yeah, coming back to the list over here, I'm going to go over one. Oops, I don't want to do that. I want to do this. One that I'm really excited about is the Unity software, ticker symbol U, $30 call expiring June 20th. This is one that I was following, and maybe I'd be interested to buy it if it dipped down to 250. Did, but I just didn't have, the money on the side that I wanted to put into it. And because I also learned from the video, I'd recommend checking this one out. I put it out on Christmas. If you're into Unity, I think it's a really super cool, fun video. But yeah, because of that video, I had realized, the reason why I was following this call was because I thought price could be going up to like 45, but this was the highest strike. And, over here, we have, let's see, $42 strike. That's the highest strike for that expiration. And this is one that I do have a position in now. I ended up buying the low. I had a limit placed at higher than that, but it got filled at 127. I bought the low on that day, so feeling really good about it. Yeah, I was one of the 19 contracts traded that day, so feeling good about it. And yeah, so for this, it looks like I would add, if the stock price pulls down to $22 a share, and I probably don't have an alert placed on that. I do have just a few shares, very small position. Actually, between two accounts, I have a few shares. So I have two in this account that I do my options trading in, one in another. Yeah, I would add another share at 22. If that gets filled, then I consider buying another one of these contracts. I don't really have a plan to sell this at this point, and I just kind of evaluate, see what that happens. If it gets up to 100% profit, then I maybe reevaluate. But if my average is like 127 and it's been up to like 300, I could easily be making a 2x on this. But yeah, what we see here is spike in volume followed by an increase in the open interest. This is like really, the beginning of this contract being available because, like I said, it is a new one. And so maybe take that with a grain of salt, but generally the open interest has been going up, so that's good. This spike in volume corresponded with about $180,000 in premium. So that's good, but, it's not $250,000, whatnot, so could be higher. The other contract that I was looking at, I'm just not really going to be paying attention to this one as much anymore. But we did see these spikes in volume corresponding with over $1 million on both of them. So that got my attention, and the increase in the open interest. So looking good there. But let's flip over to the chart real briefly, since I did go over this in the video. Why do I see $30 and $40 being levels this could be going to? One is basically getting to the top of the shaded channel, or right around here, this 100% extension. So basically this measured move. So the same distance from here to here is from here to here at 33. So I think price could be going up to between $30 and $33 a share. Potentially bumping into some resistance with this downtrend, but also I think it could be getting up to like the tops over here to form a big inverse head and shoulders pattern that would be right around 45 or $42 a share, like that contract. So I feel good about that. Between now and June, maybe it could get there. And once it got to there, I'd expect a pullback. But yeah, I just think it looks really good. Let's look at some of the data though. Looking at the $30 call, this one, unfortunately. Actually, for all of the Unity calls, it does look like there's been some selling in the contracts, or at least being more bearish with the with the stock price coming down, consolidating, and the net call premium coming down and being negative, and then the put premium also coming down. Yeah, generally it looks like it's red, so maybe a little bit of a selling pressure there. I'm not really sure though. I'm again not the best at interpreting these, learning as I go. Yeah, the other one that I have up here, this one, the $42 call, this, was just introduced. So there's not much information there. And so if I just search Unity, we can go by not searching or sorting by the highest volume, because that's chasing the sheep, following the herd. Let's sort by premium. And we can see that here we do have, hundreds of thousands of dollars in premium traded on Friday. A lot of them calls, but we don't know if those were open interest going up or down. We'll get that data on Monday. But what we can see is the open interest changes between Thursday and Friday to see if they've been going up or down. And we can see that all of them have been calls going up. Some of them in the past, this was an out of the money call, went to zero. That's gambling. All of these, went to zero. Because the closing price was below 30. Yeah, the low over here, 1 cent, went to zero. Yeah, it expired at zero, the average 1 cent closed at zero though, went to zero. These other ones, got weeks, but before they expire, so there's a little bit more to them, but they're also kind of short dated. But yeah, generally lots of open interest with these going up, $100,000 on this one traded on Friday. So yeah, I just think that Unity software, check out the video that I put out. I think it's really good. I'm excited about it. But now let's get back to the chart to go over the last one, which is going to be the VIX $25 call expiring in February of 2025 on the 19th. And this is one that, I kind of just wanted to track, really just out of curiosity, because I like to trade the UVIX. And this contract ended up, being very profitable, but then pulling back, as you'd expect with the VIX. It's not one that you want to hold forever. It's one you want to take profits on. And so I don't view this as being a good time to buy in the next week, maybe the week after that or the week following, whether that's this contract or the UVIX, which I like to trade. I don't currently have a position in it, but in a week or two, I will look to buying that, and I'll go over that. The reason why in a second. But what we can see here, these spikes in volume correspond with increases in open interest, so that's good. But also the VIX, it went up to $25 a share for that underlying price. It went above that. And so, yeah, it's just like that got filled, so open interest just keeps going up. And a lot of buys, were when it was, in the money. See, or actually, maybe a lot of sales. I'm not sure. I'm not going to interpret that. This is at the end of the video, and I don't know how useful this VIX interpretation is. But we can see with these spikes in a total premium, nearly $5 million in this one. This one's over $1.5 million. So lots of money traded on this. But yeah, I could see this spiking again, but I also could see some theta decay over the course of the next week or two before we see the next rally up. And that is really going to be based on my analysis of UVIX. Oops, yep, got the drawings here. I just need to zoom in. This is the daily chart, yeah. And so I had been drawing these like shaded boxes where it's green, it goes up, red, it comes down. I kind of adjusted them to like fit this a little bit more better, because these were not 2 week up cycles. This was just like a week going up, and then it pulled back for 2 to 3 weeks. And so we did just recently see over the course of a little over a week, see a big move get rejected from this resistance here, whether that's 550 or this downtrend pull back. And so now, it's like I was wondering on Friday, hey, maybe this is, it's taken off again. We're already in a green cycle. I think, I guess I'll draw it up here. No, I don't want to do the measurement, just do a rectangle. So from the high here to, let's see, so this is January 3rd. It's a short week next week. And so maybe this would be the red box that I'd be looking for. And so that would be the end of next week. But maybe, in all honesty, I might want to extend this out to the following week, which would expire or end on January 10th. And that would also be right before Trump's inauguration. So maybe the volatility will be cooling down before maybe around inauguration. There is something that happens. Who knows? And so I'm just going to adjust this shading, make it light green. Oh, wait, light red. And maybe I should adjust the low to be 294. It is. So yeah, I mean, that is kind of the time frame. Maybe I'd reevaluate the end of next week, and maybe I'd start to want to reestablish a position around $3. And previously for this up move, I took profits basically on, I think, the 18th. I'm not really sure for my shares. I made 10%, not that much. That's because I was not patient waiting for the bottom here. So probably like a week from now, after the 3rd, or, I'd start to think about getting a position again and then try to be like really heavy by the end of this box here, thinking that we'd see another rally, maybe get rejected up here around like a 480. But looking at the VIX chart, we see, big move to the upside. Does look like it's reclaimed this downtrend. And so, but we could be seeing some consolidation around 15 or so, maybe 14. So, I think that this is one that's good to watch. But now trading below 20. So I think that this move's over. Give it a couple weeks. Maybe we see another rally. But, it could be, smaller rallies like we saw following the big one back here in August. So do keep that in mind. But I'm just going to go over this data here. And this, really for this contract, or not this contract, all of the VIX contracts, what we can see here is that, there's no underlying because this is just an option. What we can see is that the net call premium was coming down as well as the net put premium, but the net put premium down more so. So overall more green, but there's also, some red. So it's kind of neutral. I think it's just too early. We see this spike in the premium and then it comes back. We see another spike. We want to see it come back again. And then maybe we see maybe a little spike or something, or then we see another breakout. So that's what I would look for with that one. But now, coming back to the stuff over here, I need to close the video going over Grok's top 10 premium picks. So what I'm going to do is I am actually going to pull up X to go over Grok. And actually, I think I have a screenshot of it, what I asked Grok. So I'm just going to actually copy this, the text that I asked. And so I get the same wording. And so I'm just going to type this over here. Let's see. And I'm just going to put that in here, but not, can you name the top 5 stocks? And I also, maybe I want to, minimize this so you guys can see the full thing a little better. So you can see the search, that's at 110. 110 I think is fine. Anyways, this is not December 12th. What I'm interested in December 27th. So let's look at that, the top 5 stocks, see what Grok has to say. Let's see, the top 5 stocks with the highest options premium. He used to give more information on them. That's why I was doing the top 5. But now it's just like very basic. And so the ones that he has here for the top 5, Tesla, Nvidia, SPY, the NASDAQ or QQQ, and this SPY as the S&P 500 or Meta platforms. So those are probably not too surprising. So maybe those are something that's interesting to look into. And then I will just follow up with how about the top 10. And so he'll give a list of those. And let's see, it's probably going to be the same amount of data that we got before, but this is also going to include Apple, Broadcom, which is AVGO, Apple I should mention is AAPL, Amazon, AMZN. And so the top 10, he only gives me 8. Please note that this list only includes 8 stocks because the data from posts found on X for December 27th did not explicitly provide information for the 9th and 10th positions. However, based on other posts from recent days, we can infer that stocks like Google, or I should say Alphabet, like ticker symbol GOOGL, and Visa, ticker symbol V, might often appear in these positions, but without specific data for December 27th, this is speculative. And I should note all of these are speculative, and whether or not it's going long or going short, so that's calls or puts, buying, selling, whatever, I don't know, but I just thought I'd throw those in at the end of the video. But now I'm just going to come back to this screen and throw it up here. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this coming out every Saturday going over options. Thank you so much for watching. Take care, you guys.